everyone starts screaming. How's that one? Good evening. Who do we have tonight? Hey, Mark, what's happening? Where are you? Oh, where are you? People actually live there? I thought it was a rumor. A vicious rumor. Mighty Midge just showed up. What's something you wish someone told you in your 20s? Ooh, that's a good question. All right. What do we have? All right, so that's ready. That's ready, and this is ready. I have no excuses left. We're all ready to go. Good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks looking for a simple, safe, predictable, consistent 1% per week. Yes. All righty, let's get started. It is Thursday, the last day of July, which means tomorrow starts the first day of the second month of the third quarter. All right. Well, let's see what happens. All right. Let's roll. That guy. 1, 2, 3, 4. Good evening. Julie, Sam, Eduardo. Pre down. Michael, Tim, Choi. Robert, Yusuf. Good evening. Look, CC. Kenny, Herman, Frank. Good evening. God loves Joe, Jeremy. Blah, all that kind of nice neat stuff. Beth, Matthew, Coach JV, good evening. Doug, Jonathan. Tech, Jonathan. Hey, James, you're on early. Yes, I am. Thoughts on EVTOL. What the heck is EVTOL? First one of the evening. Let's take a gander at it. EVTOL. Well, here you go, Nick. We can't find this symbol, EVTOL. Sorry, dude, it's not there. Salty, good evening. Joshy boy, what's happening? Mark, good evening. Stress that NVO never recover. Mark, so you think NVO will never? How much money are you making? PEX ends. Smoke Dog, what's going on? Let's take a look at NVO. It's a question. I actually have some NVO. And you're concerned that it will never recover? Well, let's take a look at that and see. Olivia, good evening. Paddle for me. Paddle for life, good evening. Ranger, good fellows. New edition. All right, so let's take a look. High, low, where is it? Look at the motion. Up, down. We're at 47.07. Now, every stock does this. At one point in time, they all do it. They all drop, big, huge drop. This one dropped twice. Dropped over here, dropped again here, dropped again here, dropped again there, dropped again here. That's a lot of drops to this thing. Well, let's zoom in a little tighter and see what it looks like. What do I think of University of New Hampshire? Teach me how to trade. Okay, PEX ends. Sit, chill. You're new here. Just ask questions. See how it goes. All right, so I'm looking for 5 things every time I take a look at a stock chart. Well, this here is a 1-year chart. Each one of these little symbols represents a day. One year. Each one is 1 day. Okay? There's 266 trading days in 1 year. So we only have one high of the year, and we only have one low of the year. Now the idea of this little game is kind of like Monopoly. 4 greenhouses, 1 red hotel. That type scenario. Well, here, pick a good stock and hope you can make money off of it. That's what we're doing. The trading strategy I came up with, well, my 9-year-old wanted to learn how to trade. Williamson, new stock. Hammer time. Ooh, how does that go?
I forget
how he does that.
Anyway. All right.
So let's take a good look at NVO.
The high of the year.
A year ago. Let's take a look.
A year
ago,
Novo
Nordisk was at 133. The high of the year was at the end of August of last year, and that was 139.74. Let's call it 140.
She drops down, goes sideways.
Check this out. Go sideways for a bit, but what happened in the last 3 days? Well, let's take a look at that.
Now I like looking at the last
30 days. Because the last 30 days gives me a good idea of where the stock normally moves. Well, normally. A 30-day high drops down, finds a new 30-day bottom. Now, usually when a stock drops like this, it's going to find a bottom, and it's going to keep going down until it finds that bottom. Who knows where it is? Here's a funny thing. Now, crip walk. Yeah, I can't crip walk, dude. Many blessings upon your journey. Thank you. All right. Yeah, thank you, Benny. Benny wants me to crip walk. I have no idea how to do that. Anyway, so we got a big drop, one down day on Monday, a big drop on Tuesday, Wednesday, another drop on Wednesday, and another drop today. At some point, it's going to stop. It's going to bounce and go back up again. Kitty, I'm not sure how it works, but I want to ask. May I let you set up something for me, and I'll pay you for helping me trade, and I'll give you a percentage. Lovely. So send me a number. I'll give you a buzz, and we can chat about the details. Snowwolf, what's happening? Little love me. Phone died. Okay. No idea what that means, but all right. Now Nick wants to take a look at some interesting stocks. Nick, we'll take a look at that in a little bit, but hold tight. We're going over NVO. So here's the thing with NVO. Like any company, they go up, they go down. Some things happen in the news, and this happens. Okay. Now this Tuesday. Alexa, skip.
I cannot skip to the stream.
Oh, lovely. Okay, so this right here was caused by the market maker. Now, we all know who the market maker is. He's the person you buy and sell from, because you can't buy and sell from anyone else except for the market maker. Sorry. That's his job. His job is to open up the store and say, hey, we're open today. Come on in and buy some stuff. Sell me some stuff. You can't buy directly from the farmer. When you go to the grocery store, when you go to the Circle K, when you go there, the farmer, you have to buy for the market maker. Now the market maker, he'll buy a gallon of milk for $3 and he'll sell it to you for $3.50. He's got to make his cut. And whatever trading platform you're on, whatever one, it doesn't matter. You cannot buy, you cannot sell from anyone else but the market maker. Sorry, it is what it is. So this here was created by the market maker. Now there's 5 numbers when it comes to stock. There's the opening price of the day. There's the high price of the day. The low price of the day. There is the volume of the day, that's how many shares traded, and then there is the range of the day, that's the distance between the top of the day and the low of the day, that's how much the stock moves. Look at Starling! Okay, so those 5 numbers, out of those 5, we the buyers and sellers, we control 4 of them. 4. We control. We buy, we sell. We think if it's too high, we're not going to buy it. We think if it's too low, we're not going to sell it. Plain and simple. If it's low and we like it, we're going to buy it. If it's high and we like it, we're going to sell it. Whatever. We control 4 of the 5 numbers. One number, only one number is controlled solely by the market maker. And that, my friends, is the opening price of the day. So we closed here on Monday, right around 69. Tuesday, the market maker says, well, I'm going to open up at 54.
exactly what he did. He opened it up at 54.
And it's his right.
He's the store
He's the store owner.
Okay, he's
the one who opens the store.
He says,
guess what? Today,
I'm buying
at 54. So
the blue line in the back.
See these little blue lines down here at the bottom?
That
represents volume, how many shares are traded that day. Well, this is the average right there. Look how small those lines are.
Now look at this.
That is 10 times. 10 times the amount of volume. But you know what we don't know? We don't know when this thing made this big drop and all that volume, all those shares traded. We don't know, were those buyers looking to get a good deal? Or were those sellers panicking and jumping ship? Anytime a stock moves, someone's panicking and someone sells at a loss. Just human nature. They think the world's going to end, so they sell and they take whatever they can get. Whether or not they bought it up here at like 72, and now the market maker says, I'm going to start selling at 54. If you bought it in the first place, why would you change your mind on something you bought? You consciously made the decision. All right, I like NVO. Great, I'm going to buy me some. Well, I bought some.
And mine are somewhere at the
I think 64 area.
Because
I've had it for a couple of weeks. It might even be at the 70 area. I don't really remember. I got too many to keep track of everything off the top of my head.
Now I'm like
Einstein. Not saying I'm as smart as him, but I mean I'm like Einstein. He says, why should I clutter my mind with things I can easily look up because they're written down somewhere? Trust me. I bought it. I know I bought it. As a matter of fact, it is written down somewhere. So why do I have to remember what I bought it for? I want to free up my mind for other things. Okay. So it's written down. Now I don't have to clutter my mind with it. So I own some. And it dropped. Now, do I really care that it dropped? Not really. It bothers me just a smidge. Because it adds one little twist to my trading. Okay, so up here, I had no problem selling the 68, 69, 77 that year. I had no problem selling that option against it. That's right around the area where I bought. But once she drops down here, well, now I have to sell options down in this area, which opens up to some risk. And I don't like risk. So, don't get me wrong, I'm going to do it anyway. Because I want the cash flow to come in, and I do have a high risk tolerance as opposed to some people. That being said, we're currently at 47. So more likely, I'm going to be looking at the 50s, 51, 52 area. That's what I'm going to be looking at. Even though I bought in the 70s, 60s, and 70s, I'm going to be selling the 50s or the 51s.
What was that? Nothing wrong with that at all. But here's the thing. I don't mind the risk. I'm here every day, twice a day. Once in the morning and once at night. So I got a good idea of what's going on. So it doesn't really bother me that much. Now for those who starting out, you might want to do things just a little bit different. Okay. Now I have a couple pieces of advice, and I don't give tips. Number one, I don't tell people what to buy, what to sell. That I don't do. But the tips that I give is number one: don't use real money until you're good at paper trading. Don't buy any real estate until you're really good at monopoly. Same thing. Okay. Two, don't use margin until you understand the risks involved with it. Number three. Never buy something you don't want to own long term. That's my rule number one, I believe. All right. So I'm about to tip my hat and let you know how old I actually am. I remember when they came out with such a thing called a seasonality chart. Now, a seasonality chart is kind of almost exactly what it sounds like. The seasons: winter, spring, summer, fall. Well, first quarter, second quarter, third quarter, fourth quarter. Now we all know that winter is in the fourth quarter. We know that spring is in the second quarter. We know that summer's in the third quarter, so on and so forth. Or the second quarter, whatever. Anyway, Here is a seasonality chart. All the way to the left is January 1st, all the way to the right is December 31st. The end of the year, beginning of the year, end of the year. This blue line here, that represents the movement for this year. This year's movement, the blue line. Okay? This red line is 10 years of average movement. Average movements. That's 2015, 2016, 17, 18, 19, 20, so on and so forth. 10 years of data. Now, I can change it and look at 5 years if I want. I can look at 20 years if I want. I'm kind of curious. What does 20 years look like anyway? Right there, 20 years. All right, so that's what 20 years of data looks like. Okay. This year hasn't changed at all. The red line. That's the average movement for 2 decades, 20 years. Now, I don't like doing 20 years because I think it's too far in the past because 20 years ago was a different world. So 10 years, 5 years is not enough. 10 years, I think is right. So I'm going to go to 10 years right there. Okay. So this is where we are now, 731. Well, look at average movement does. Basically just sideways, and then she slowly starts to go up in August. Now, if she slowly goes up in August, well, why the hell not? Why wouldn't I want to stay into Novo Disc? I'm just going, Alexa, off. I don't like commercials. I don't. Anyway, so I don't mind holding on to my Novo Disc because after this crap right here is gone, the first couple of weeks of August, then she's going to start to rise. Now, it's not guaranteed. It just gives us an idea of what the stock normally does. Normally does this time of year. Ethan, thanks for that. Mazi, good evening. Alexis, good evening. Davido. All right, so let's get out of there. Back to there. All right, so I'm not hugely concerned with the big drop. However, I will keep my eye on it because as soon as it turns around and starts going back up, I might think about doing some dollar cost averaging. Because like I said, I'm up here in the 60-70 area. And right now, we're down here in the 40s. Which dollar cost averaging makes it easier for me to sell it in the long run. Which eventually I will. All right. So that being said, we're just going to sit and watch NVO. I'm not worried about it, and I'm not quite sure what you think. Orlando wants to take a look at UPS. The ups dudes. UPS. Same thing. Okay. 4 days to the downside. I'm not quite sure. Orlando, what it is you want me to say, because UPS is on my list. Now, when I say list, let me explain briefly what do I mean by list. Well, every week we check to see how many stocks are actually available for us to invest in. Well, this week it came up to, correct me if I'm wrong, I believe it was 10,246, or was it 10,146? I don't remember. Happens when you get older. Anyway, so that being said, what I'm looking for specifically is 2 things and only 2 things. Consistency of profitability. UPS has that. And weekly options. Now, when I say I want weekly cash flow, actually it's one of my catchphrases. Dividend investing for weekly cash flow. That's what I'm looking for. Orlando, no drug company will do well. Drug prices will come down and less revenue for the companies monsoon. All right, Orlando. Thank you. What do I think of Figma? I have no idea what Figma is. What is your background? Rage bait. What is my background? It's insignia. I believe this is a 55, and that's just one of those boards with letters. That's my background. I'm not quite sure that's what you were asking, but that's what it is. Anyway, what computer program is that with the graphics? AB. This is not a computer program. This is a trading platform. So if you want to buy and sell stocks, you want to buy and sell crypto, you want to buy and sell futures, you want to buy and sell forex or whatever, you need a place in order to do that. Well, this is Charles Schwab's Think Swim. Now you can download it for free and use it for a while. Now they do want you to give them a call and say, "Hey, I'm using your stuff." Eventually, they will like you to, bring your money over to there, give them your business. Kakaram, what's happening?
Dark Eyes. Quick question. Go ahead, shoot.
All right. Karen TV says Novodisc is going down. Oh my goodness! It took you all that time to figure that one out. I can get my 5-year-old grandson to say Novodisc is going down. Do you goon? I have no idea what goon means. Hi, Osvaldo here. I haven't seen you considering the dividend payment date when selecting a trade. Ooh, good question. Orlando, Pfizer, Merck, etc. Drug companies, drug prices are in dividends in jeopardy. Moon goon. I have no idea what moon goon means. Enlighten me. What does moon goon mean?
Okay, so Osvaldo, do not ask that. Crimson. See, here's the funny thing. Someone is throwing a word at me. I have no idea what it is, and I'm asking what it is, and someone's telling me that I don't want to ask what that is. Okay, so Osvaldo, let me answer your question. Let's get rid of this. Because you're relatively new. Well, I'm gonna say, all right, Osvaldo. All right, okay. I hate those updates. You know when your computer updates automatically by itself? What the hell is that thing that just jumped on my computer? I don't remember getting that or signing up for that. Oh, Moon Goon is one of the guys in the chat room. Okay, Cody Rhodes. I have no idea what all that means. Okay, Osvaldo. This here is what is called an EX dividend calendar. All right. Now, anytime you're dealing with dividend stocks. Now, didn't we talk about dividend stocks a little while ago? We said there's over 10,246 different companies we can invest in. I check every week. Every week they add more companies. So I'm just kind of curious. How many stocks are available this week? Well, this week it was 10,246. So out of all of those, only about half of them actually share their profits. So you basically have 3 different companies. Company 1 is a private company, which very seldomly can we invest in. They usually private deals in the background. Number two are those companies that take all of their profits, throw it back into the company for capital growth. That's those stocks you buy and then just shoot up and up and up and up and up. They take all the profits and put it back into the company for the accelerated growth. A lot of people like that. Well, the third company is a dividend stock company. Now they take their profits and they divvy it up to all the investors. So those are the only ones I like, because at my point in my life, now we all go through phases in life. You have your infancy, your childhood, your adolescence, your teenagerhood, the young adults, and then your adults, and then your mature audience, and then you have your retired folks. Well, I'm in the final stage. I'm in the retired stage. So what my goal is going to be a lot different than a lot of your goals. So, Osvaldo, I haven't forgot you. Sit tight for a second. So where I am now, I want cash flow. Because I'm retired, which means I don't punch a time clock anymore, which means my money has got to come from somewhere. Jesse, James W. the Fat. I have no idea what that means.
So
at this
at this point in my life, I'm looking for cash flow because I need money to pay my bills. Now, argue all you want. At some point in your life, when you retire, your money has to come from somewhere. And I've always got this, the new age. Why is it always about money? Because we are the only species on this planet that pay to live here. We have to pay to live on this rock. Now we weren't asked to come here. One day it was like spank, and we just showed up because mom and dad were doing what mom and dads do. And we show up. Were we asked to be here? No, we just showed up. But yet we have to pay to live here. So depending on how you want to live, your money has to come from somewhere. And when you get to my age, you got two choices and only two. Number one. You can take responsibility for your own money and do it yourself. Make your investments wise and whatever. Do it yourself. Number one. Or number two, give up accountability. Give it to someone else and let them do it for you. But I can pretty much guarantee that nobody has as much interest in your money than you do. So take your choice. Take responsibility. Do it yourself. Take responsibility. Or give it to someone else to do. Nothing wrong with either one. Everyone is different. Everyone is on their own path. I'm just here to share what I do. I don't expect anyone to follow me. As a matter of fact, if you follow me, you get a couple screws loose because who the hell am I? I'm just some random guy on YouTube. There's only about maybe a handful of two of people in the audience that I've actually met personally. Because if I'm going to help someone with their investment and somebody wants me to invest full, I have a requirement that is rather odd. Meaning, I will not take any. Now, I need you to all listen to this very, very, very closely. Okay? Because some of you will be scammed and some of you will be approached. So listen to the words coming out of my mouth. I'm going to say them slowly so you understand them. And I will enunciate and go slower so you can understand. Now, if and when I take money from anybody, I have a requirement that you are standing toe with me, we looking, shake your old school, terribly sorry. So if you get an email, a text, a WhatsApp, a telegram, anything like that, say, I got a great deal for you and only for you. Yeah, that ain't me. Sorry. I'm old school. I'm telling you right now. You want help. You want me to help you out. Great. You come to where I am, or you fly me to wherever you are. We sit, we chat, we have lunch, we get to know each other, and then sit overnight, day two. Decide whether you want to get in business with me, and I'll decide whether I want to get in business with you. I don't make snap decisions. I don't take any money from anybody I don't know. Okay, so if you think you're having a nice conversation with me via email or via Snapchat or via whatever those other things are, that ain't me. Terribly sorry. There's about, as far as I know, there's at least 35. And I bless them every day. Thank you guys for copying all my shit. You know why? Because they're doing a great job spreading the word. Now, I can't help it if some people fall prey to them. I can't help that whatsoever. Okay, TikTok won't do anything about it. Neither will Google. They won't do anything about it because they are spending money and they are attracting people. So all I can do is say these words again. If you want help from me, I expect you to send me your phone number and I personally will call you. Personally, which means I'm not going to pass you off to someone on my team because guess what? I don't have a team. It's only me. This is not a business. This is just a hobby. I'm having fun and I am creating a video log for my children and my grandchildren. Because when I am gone, they're going to need something to learn how to do this. Because I've already decided many years ago, they ain't getting a penny of the inheritance until they can prove that they know what to do with the money. I'm a big beginner. I'm a big believer in self-education. All right, so Octavio, Osvaldo, EX Dividend calendar. Each one of these little green dots represents a company that is going to pay a dividend. And the reason why I prefer dividend-paying stocks over any of the other companies
Stacy doesn't want to end up sleeping with the fishes. Actually, Stacy, you see my fish tank. I got a big, huge fish tank. You can actually crawl inside my fish tank. It's that big. Anyway, dividend calendar. The reason I like dividend stocks and only dividend stocks because, number one, they're very predictable. They're very consistent. Orlando, how could we send you our number? Okay, Orlando, you're on YouTube. Now, YouTube is the only station anywhere that has my phone number. My phone number is actually on YouTube. So dig deep for it. Send me a text. Tomato soup. That's funny. DM. Okay, whatever station you are on. There is a little bio that gives you information, who I am, my name, my company name, how long I've been in business, my website, blah, blah, blah. Yeah, go right up there to the bio, and the link's in the bio. Send me an email with your number on it. Mikey! James, what do you think of NVO? I know it's not 2 days to the upside yet, just seeing for what it does. Hey, Mikey, I'm going to be totally honest with you. I already have NVO. Okay? And yeah, NVO, well, it's not here at the moment. Mikey, I'm going to address that in a second. Right now, I'm still working with Osvaldo over here about the dividends and the EX dates. So let's get back onto this topic. Is that Mary June? Hey, Mary June! I haven't seen you in a while. Wait a minute, you were here last night or the other day, I think. You were here this week. I remember seeing you here this week. Yay! All right, so that being said, Osvaldo, EX dividend date tells you, the EX dividend calendar tells you when the company's going to pay their dividend. Now let me explain to you why that is important. Okay, remember I said dividend stocks are kind of boring, but they're consistent and they're predictable. They do the same things over and over and over again. And most of them have a dividend every 90 days. Every quarter. 1, 2, 3, 4. January, February, March. First April, May, June. Second quarter. July, August, September. Third quarter. October, November, December. Fourth quarter. We are currently in the last day of the first month of the third quarter. Tomorrow is the first day of the second month of the third quarter. Okay, it is what it is. So all these stocks right here are paying or did pay a dividend this month. 141 here, 31 there. Look at nothing there. That's July 4th. Nothing. Nobody pays a dividend on July 4th. 33 here. Look at them all. That's a whole bunch. Okay. You got 141. That's everyone. That's 70. There's got to be at least 600 of them there. At least. That's just this month. And then we have next month, and then the month after, 3 months to make a quarter. Now, I only like companies that are consistently profitable. I already told you that. Now, my idea of consistently profitable is 2 decades. Not 2 or 3 years, not 2 or 3 months. 2 decades. Do you measure your portfolio performance against the market? John Doe, yes, I do, and it's not a good thing. Okay. Just to give you a rough idea, in one account I made 6% this week. Just this week. One account I made 6% for the month. So if you get 6% a month, that's 72% per year. That's craziness. Anyway. And we'll get into a few more things. So let's go back to Osvaldo. So all these little green dots represent the EX dividend date. Now let me explain to you the 4 dates. Remember, they're right down here. Okay, symbol, dividend amount. First date, second date, third date, fourth date. 4 dates to remember. The first date is what they call the announcement date. That's when the company says, hey, this is how much money we made, this is how much you're going to get, and this is when we're going to pay you. They're just telling you what money they made, how much you're getting, and when you're going to get it. It's just the announcement date. It doesn't really mean very much. Date number 2 is the important date. That is called the EX dividend date.
Simply put, it is the last day the stock trades before the dividend is paid out. So if you want to collect the dividend, you have to buy it before the little green dot. EX date. Date number 3. The date of record. Whoever owns the stock on the date of record is entitled to the dividend. Date number 4. Gates. Gates is in the house. Woohoo! Date number 4 is what's called the payment date. We all know what that means. That's when cha-ching, thank you. Okay, anyway, so that being said, Osvaldo, EX Dividend Calendar tells you exactly when a stock is going to pay the dividend. Why is that important? Well, for the stocks that I like, let me just show you a list of one of my lists. Okay. Each one of these little green dots represents a company that has increased its profits for a quarter of a century, 25 years. 25 years of increased profits. Each one of these little green dots. This is just the month of July. Well, we get the month of August coming up next, and it's another whole set of different companies. So why is that important? Well, number one, 25 years of profitability. Why wouldn't you invest in those? Number 2. Number two is stocks just before the EX date have a tendency to increase in value. So think about that. I just gave you 2 huge pieces of information. What are you going to do with them? Number one, the companies have been profitable for more than a quarter of a century. Number 2, just before the little green dot, the stock has a tendency to go up in value. So by knowing that they're profitable, great. You put them in your roster. You say put them on your list. Remember I told you the list? Okay. Now we know when they're going to go up in value. Great. Now, I say this all the time. If you knew a stock was going to go up and you knew a rough idea of the date when it's going to go up, what would you do with that information? I ask that question all the time. And almost every single person said, I'd buy the stock. There's nothing wrong with that answer. It's not the answer I'm looking for. Because if you buy a stock, you have to wait for it to move in order for you to make a profit. Thanks, James. I did not know it was monthly. Okay, thank you. No tea tonight, ginger ale. I'm still getting over that sickness. For those of you who don't know, I've been sick for the past past week or two. It's almost gone. This is great. Still not back to normal. It's a little uncomfortable. Can't go to the gym. Can't work out because I feel like I'm going to yak. Okay. So if you knew a stock was going to move, what would you do? Now, the trading strategy I'm going to share with you tonight, I call it Dividend Caption 2.0. It was created for my 9-year-old daughter. 2008, she says, Daddy, what are you doing? Can you teach me? Think about that for a second. If you're a parent, you know how awesome it is to have your child come up to you and say, hey, let's do something together, just you and I. So my 9-year-old, not the boys, had no interest in money whatsoever. But my 9-year-old daughter says, Daddy, can you teach me? So most adults don't know how to trade consistently, profitably. And here's a 9-year-old girl wanting to learn how to do this? Okay, fine. So I had to come up with a trading strategy specifically for her and her alone. So 9-year-old little girl, number one, it had to be simple. It had to be safe, predictable, consistent, and no way for her to lose. People love that last one. There's always a way to lose. But for the purposes for my 9-year-old and no way for her to lose. So we want to make sure that stocks we look at are going to be safe companies. They're going to be around for a long period of time. So I got 5 rules. That's the 5 criteria. Simple, safe, predictable, consistent, no way to lose. 5 rules. In their simple rules. And the funny thing is, I'm going to tell you these rules, and you're going to think to yourself, oh, that makes sense. If it makes sense, why is it that adults make it more complicated than it needs to be? That's an honest, valid question. Why do adults make it more complicated than it needs to be? The trading strategy. You ready? 5 rules. Rule number 1. Never buy something not on the list. Remember I told you the list? Good quality companies you have no problem buying and holding for the rest of your life. Consistently profitable. So never buy something not on the list. Number 2. Never sell at a loss. Do I really care that NVO went down? Not really. IBM went down? Not really. Intel went down? Not really. I have a whole and Dow. Dow went down too. I got a whole bunch of stocks that dropped this week. Do I care? Not as much as I should. Kind of bothers some people. James, the stock went down. What are we gonna do? Number one, don't panic. Remember rule 1: never buy something you don't want to hold on to. If you can't picture yourself holding on to it for the rest of your life, don't buy it. That's all stocks do. UPS. High of the year. Low of the year. Look at the motion. Down, up. Big drop here. But that's all they do. The high of the year, 145. The low of the year, 86. That's almost 45% drop from there to there. If you're not ready for a drop like that and say, you know what, not a big deal. UPS is profitable. I don't think they're going anywhere. I have no problem putting my money into it. That shouldn't bother you. Should it? Because here's the thing. Every 90 days. Dividend. Take a look at this. Dividend. Stock went up. 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 And it dropped. Okay, so the Paul. Meeting group. Sorry, that was for tomorrow. Oh, sorry about that. So. That's all they do. They go up, they go down, they go up, they go down. But here's the thing. If I bought it at 85, the low of the day, the low of the year, sorry, and you bought it at 145, guess what? We're both collecting the exact same dividend right there. 163, 164, 164. Okay. We're collecting the exact same dividend. So what's the big deal? People panic when they drop. Simple. Don't panic. It's like when you put your money in the bank, you put it there, you set it, forget it. Big deal. Orlando, James, how can I get your number? Please give it me a hint. Make it simple. Okay. Do you measure your portfolio? Yeah, I do. John Doe. It's not a fair. It's not a fair comparison because I look at things a lot differently than the overall general market. I'm looking for certain things where the general market is basically cafeteria food. Think about it. Cafeteria food is usually bland and made for the masses. You pick yours and then you season it to the way you like it. Well, I don't do that. I do a totally different strategy, which we're going to look at in a little bit. You see whether or not it makes sense to you. So Orlando, I'm going to tell you again. In the bio, you're on YouTube. You can't get to YouTube without going through the 10-minute trader. That's where you're on. You're on the 10-minute trader website on YouTube. So you just go to the. I think it's down below where you can send me a DM. Aces. What's happening, Aces? Where was I? I get distracted easily. Sorry, I have ADD. It is what it is. I'm not going to sugarcoat anything. It is. Okay, so if we can't do something with TikTok, we're going to have to reboot because those numbers look a little bit low. Anyway. back to the calendar. Back to as I was saying.
So
So 4 dates.
I like
to buy before the EX date. I like to do a safe trading strategy. Remember? Simple, safe, predictable. We're actually going to do a couple of trades tonight. You actually see the mechanics of how it works. If you have any questions, ask them here. Or if you have a chance to that screen right there behind me. Now, me standing in front of the screen is what you're seeing now, but the screen itself is live on YouTube. That will allow you to see these little tiny numbers. You probably can't see these numbers on your phones. Okay, you probably can't see these ticker symbols on your phones. But if you're at home, you can go into the living room, plop down your big easy chair, pull up that big 80-inch screen TV you got, and just click. You should be able to get on YouTube. And if you can't get on YouTube, you got the wrong cable company. Anyway, so that being said, buy it before the EX date. Use a safe trading strategy. Now the trading strategy I use, the stock doesn't have to move at all, and I still make a profit. Think about it. When I say, what would you do if you knew the stock was going to move? Most people say, I'd buy the stock. I wouldn't. There's a certain strategy I would use, and it's a simple strategy, and it's a safe strategy. Remember, it was created for a 9-year-old. So I had to combine this, and that, put it together to create the old mix for my 9-year-old. Because it had to be simple, safe, predictable, and consistent. Less than 10 minutes a day. How do you keep a 9-year-old entertained? And trust me, some days, 15 years ago, it was like pulling teeth with her. Said, honey, you can't just decide to do something one day and then decide the next day you can't do it or you don't want to do it. Consistency is key. Whether you like it or not, you got to brush your teeth every day. Like it or not, you got to shampoo, shave, and take care of yourself with personal hygiene every day. Whether you like it or not, you got to feed your birds. Okay, you got birds, you got parakeets, you got parrots. You got to feed them every day. You got a turtle, you got a rabbit, you got a guinea pig. Fine, you got to feed it, water it, take care of it every day. Well, why don't you do that with your money? Why don't you teach your children and your grandchildren? Out of everything that comes and goes out of your life. Now, money shouldn't be important. However, it is an evil necessity. You need it in order to live on this planet. All right, we just hit 49. So for you guys on TikTok here, we're going to cut this one here, and then we're going to reboot. So the rest of you guys just hang out. I'm just rebooting this channel here. Because for some strange reason, we dip below 50. And anytime we dip below 50, I always reboot. Right. The reboot sends out a whole new invite for some strange reason. Let's go there. Let's go here. Let's go there. Let's go there. And 3, 2, 1, and we're live again. And I send it all over again. Let's do this. Let's do that. Let's do this. And let's do that. There we go. Now we're back live again. Not that bad. Rebooting is not that difficult. Okay, so as I was saying, build a list. Now, when I say build a list, there's over 10,000 different companies to choose from. The list should look something like this. Dividend Kings. 5 decades. That's a half a century. 50 years. Half a century of increased profits. Dividend Aristocrats, 25 years of increased profits. Dividend Champions, 25 years of increased profits. Dividend Contenders, 10 to 24 years. And then we're going to throw in Warren Buffett's list for the fun of it. That's my 5 list. Old money. Sorry. Mr. B. Spapa. All right, whatever. Old money. Well, I really don't care if it's old money or new money. It always spends the same. Green money is green money. Okay? If I go to the Starbucks with a dollar bill printed in the 1950s, says 1954 down in the vintage date. I can buy where I want. Now, if I have a dollar bill printed in the 1990s, I can do the exact same thing. Old money, new money, I really honestly don't care. Green, it still spends the same. Edinberto. I hope Asians save me from the scalp trading QCOM and evaluate the stock price. Elevate the stock price. Okay, whatever.
Orlando, James, do you sell cash secured puts? Every once in a while I do, but not mainly. Okay, so Osvaldo, I hope that answers the question when it comes to dividend stocks and the EX dividend dates. Knowing when the stock's going to pay the dividend is ideal because it gives you a little tiny bit of an edge. Now, if you want to be successful, well, it's a good idea to have the odds and probability. Dirt farmer, dude, how you doing? You need to have the odds and probabilities in your favor. So if you can stack as many odds and probabilities in your favor, you're going to be more successful. So the EX dividend date, we know a couple of things. One, it's more than 25 years of consistent increase in the profits. Great. Number two, they got the dividend coming up, which usually means the stock increases just before the EX date. Just by knowing those two, we have an edge over everyone else. Okay, number one, we know it's a good company. They've been consistently profitable. Great. We know that there are dividends coming up, which means usually they go up in value. Best tutorial for Thinkers Swim for covered call. Okay, K-Van, there are literally hundreds of videos that show you and walk you through what a covered call is. Simply put, you're buying a stock. Once you own it, you can do whatever you want. Now a covered call, once you own that stock, you have the ability to sell to someone else at a certain date for a certain price. And for that, they will give you what is called a premium. That is what I'm looking for. The insurance premium. Just get ULTY for 2% a week. Okay, freezing in Iowa. Okay, ULTY. I need to pick on someone tonight, so you just volunteered. So let's go take a look at how wonderful ULTY is. Let's check this out. ULTY. Now, I don't like ULTY, and I'm going to tell you why I don't like ULTY. ULTY. Here we go. Are you ready? Give it a second. ULTY, and I'm going to tell you why I don't like ULTY. ULTY. Here we go. Are you ready? Give it a second. Now, I always tell another little tip I give everybody: if you're going to be investing, you have access to a financial website. I like Yahoo Finance. You can use whatever financial website you like. This is the one I like. Okay? It's not that the information is different; it's just in a different location. Okay, so here, ULTY, Yield Max Ultra Option Income Strategy, blah, 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 $6.14 per share. Okay, fine. So what I'm looking for here, which I can look at the stock prices, the open, the low, the close, all that information, high, low, all that. I want to know, are they profitable? I want to know, are they consistently profitable? Here's the thing. Consistency of profitability. If it's official, if it's consistently profitable, the dividend will increase. Think about it. If I make more money, I share more money with my employees. That's what it's all about. If the company is consistently profitable, they are going to give more money. Plain and simple. I have two choices. I can look at monthly, quarterly, and read them all. Find is this company profitable? I can go to the dividend increases. You cannot increase the dividend without having more money to do so. It's just plain and simple. So if the dividend goes down, if they have less money, dividend goes up, that means they have more money. ULTY, let's see how wonderful they are. Because apparently somebody here thinks they're great. Okay, so let's go and see the maximum amount of dividends. And see all of them. February 2024. You think that's good? 24. This thing's not even 2 years old yet. This is not even 2 years old yet. Not even 2 years. That's like, hey, I got this brand new Corvette. Oh, you're 15. Yeah, take it for a ride. Crazy? Are you crazy? All right. So let's look at the numbers. Hypothetically speaking, as good as you say it is, the numbers should go higher and higher. Should go higher. Let's take a look. The very first one. March 14th, 2024. March 14th, $1.06. $1.06. The second one, $1.41. Oh, that's a nice increase. That's like a 38% increase. Awesome. Third one.
Third one, 120. Wait,
Did I read that 120?
did I read that 120? Did that go
From
backwards?
140 to 127? Wait a minute.
Wait a minute.
They lost money.
They lost money.
113? Wait a minute.
113.
That's lower still. 99?
That's lower.
That's lower still. 78?
No,
That's 78? What the hell?
low.
Come on. You said this was a good place to put my money.
Come on, you said this was
106,
put my
141.
money.
That's great.
106,
127, that's backwards.
127. That's backwards. 113. That's backwards.
That's
198. That's backwards. 70. That's
It's
backwards.
going backwards. How
It's
the
going
hell can
backwards.
you say
How can you
ULTY
say
is a profitable
ULTY
company?
is a
The
profitable
numbers are
company?
getting lower and
Numbers
lower.
are getting low.
Hold that thought for 1 second. Let me show
Hold
you
that
what it's supposed to look like. MSFT. Now we all know who Microsoft is.
Now we all know.
You like the guy. You may hate the guy. I think he's a dick. But hey, what the hell do I know? Okay, we want to go back to take a look at all of the dividends for Microsoft. Okay.
Let's go to 2005 because that's 20 years.
Okay, so 2005.
Okay, so 2005,
8,
8,
10, 11,
10,
11, 13, 16, 20, 23, 28, 33, 36, 42, 46, 51, 56,
42, 46,
68, 75, 83. I don't know where you
I don't know where you went to school, but where I went to school, that
is going higher,
is going higher
and
and
higher
higher.
and higher, year after year,
year after
more
year,
and
more
more
and more and more and more.
ULTY,
ULTY, yeah, up, down, up, down, up. Yeah, no, thank you.
I'm terribly sorry.
I'm terribly sorry.
No, I'm 61.
No, I'm 60.
I ain't gonna sugarcoat
I ain't going to
anything.
sugarcoat anything.
Terribly sorry.
Terribly
If
sorry.
it's not
If it's not consistently
profitable,
profitable, I don't even look at it.
the company's not even 2 years
It's
old.
not even 2 years old.
And
And
the first two were great.
two were great.
Third, fourth, fifth,
Third, fourth, fifth, sixth.
downhill.
Yeah,
No,
downhill.
thank you.
No.
That's not consistently being profitable. All right. Anyway.
All right. Anyway,
No for me.
no for
If
me.
you like,
If you like
ULTY,
ULTY, fine. You do.
You do.
You do
I'll
you.
do
I'll
me.
do me.
Mikey.
Mikey.
FCX.
FCX. Let's take a look at that one a little bit. Hold on.
Okay. So.
Okay. So
Freezing in Iowa.
freezing in.
Does that make sense?
Does
to
that make sense to
Okay.
you?
If
Okay.
the company
If the company is consistently profitable,
the numbers will
the
get
numbers
higher
will get
and
higher and higher and higher.
Okay.
Okay.
And if the company
And if the company is not consistently profitable, they will go lower and lower and lower, which is exactly what ULTY is doing.
And you're saying.
And you're saying 2% a week. That's 100% per year.
Want to learn?
Want to learn
how to use
Think or Swim? Okay.
Mindy.
Hi.
I know this.
I know this is off topic, but
is it worth
looking into doing daily covered calls, SPY and QQQ pros and cons?
Well, number one,
SPY, which is the same thing.
Seconds ago. All right. You ready, Mindy? Let's go back to 2005. Okay. Here we go. 2005. 46, 48, 52, 67. Looks good.
51, backwards, 55, 57, 79, 55, backwards.
77,
64, backwards, 66, 69, 71, 56, backwards, 51, backwards, 50, backwards, 59, 48, backwards. I don't do SPY, they're not consistently profitable. And number two, $600 a share. Yeah, no thank you.
But hold on.
I haven't done this in a while, right?
Hold on, Mindy.
Hold on, Mindy.
It
It actually gets worse. You ready?
We're gonna come over here.
We're going to come over here
and take a look at
and take a look at the summary.
the summary.
Because that gives us an idea of what all the numbers look like
thrown together. So
Summary,
SPY.
SPY.
Are you ready?
Are you ready, Mindy? You're not going to like
You're not gonna like it, Mindy. Are you ready?
You're not going to come on. Come on. Ready?
I just got a brand new modem.
I got a brand new modem.
Oh, that's right. That's not the old computer.
That's right.
Look at your hair computer. You ready, Mindy? Check this out. Yield. Right? Do you know what the yield is? That's what your rate of
The
return
yield
is.
is, that return is your yield.
1.16. Now,
1.1.
Mindy, 1.16
is not for the week.
It's not for the month.
It's not for the month.
It's not for the
It's
quarter.
not for the quarter.
1.16 is for the year.
1.1%
for the year.
for the year. So you invest
money.
all your,
You know,
let's say
$631
$631 per share.
Well,
Well, 1% of $631 is $6.
So you're putting all your money into this, and you're gaining
1.16% for the year.
Explain
to me why you think that's good.
Second,
year-to-date total return
8.96.
That's just this year.
Okay,
That 1.1 is last year carried forward. 8.9% for this year. 8.9. We're in week number 31. 31. Somewhere in that area. 26.
Yeah, we're on week number 30.
We're on week number 31.
Tomorrow's
the last day of week 31.
So Monday,
we start week number 32. 32.
Okay.
So
I don't like
SPY and QQQ is the exact same.
The numbers
just don't look.
You think they do.
You think?
Let's take a look at the Qs. 0.51. That's a 0.5%. Okay. You're putting up $568 per share for Qs. And it's paying a 0.5% per year. So 1%.
So
568. Well, it's $5.68.
Well, it's $5.68
for 1%. You're getting 0.5%. You're getting
0.5% of $5.68. $2.75.
So you're putting
$568
and a year later,
you're
getting your
$568 back.
$2.75
for your 0.51%
for the year. Mindy, explain to me why you think that's good. 0.5% a week. Well, that's 26% a year. 0.5% a year.
0.5% here. Oh, that sucks. My humble opinion. I could be wrong.
But let's take a look at historical data on the Qs and see what their dividends look like. Come on, now touch me, baby. All right, historical prices right here. Historical prices. I want to take a look at the dividends. Historical dividends only. Okay, dividends only. And I want to look at all of the dividends. I only want to go back 20 years. Okay, I only want to go back 20 years. Okay, because that's profitability. Here we go, 2005. Right here. Ready?
3.5 cents.
3.5. 10. So it goes from
3.5 to 10.
That's awesome.
That's a 60% increase. Wait a minute.
What was I saying?
3.5. No, wait a minute.
That's 100.
That's 100. Almost a 200% increase.
Right there.
3.5 to 10. 200% increase.
Then it goes from 10 to 2.9. That's an 80%
decrease.
Then it goes
2.9 to 2.6.
That's down even further.
Then it goes to 2.3.
That's down even further.
Then she jumps back up to 5.
5.4, then
5.4 drops back down.
2.7,
2.6.
You
see where I'm going with this, Mindy?
It's
not as profitable as you think it is.
Numbers
don't lie.
Hey, this
is what's called
the data stream.
It will tell you each and every bit of data that you want. December 24th, 2023. Well, there's the dividend.
Okay,
March 21st, 2007. There's the dividend.
Now, if I want
to see the high, the low, the close, the volume of all the numbers, well, that's there too.
I don't want to look at that.
I don't want to look at that.
I want to look at the consistency of profitability.
Because if the company is profitable,
they give
some of the profits back to us, the investors.
So no,
I don't do SPY and I don't do the Qs.
Terribly
sorry. I only stick to the dividend kings, dividend aristocrats, dividend champions, dividend contenders from Buffett's list.
That's my preference.
Now, could you do covered calls on those? Yeah, you could.
AC,
QQQ, and SPY, different things. You know,
I didn't even think of that.
Of course, they're
Two different things. Come on. SPY is one and QQQ is another. Even a 3-year-old can tell you that. One of these things is like the other. One of these things. Come on. We know that SPY is one thing and QQQ is something totally different.
Totally different.
Different approach. That would be hilarious. Hold on. Wait a minute. What platform are you using? Brandon, this is called Think or Swim. I heard you make money on the buy, like UPS, for example. Sometimes. It depends. It depends on your strategy, what you're using.
Don't listen to
the guy or follow Professor G. Who the hell is Professor G? Brandon, good evening, sir. What platform are you using? Okay, go listen
to your
G professed AC. No one cares what you say. Thank you, Apex.
Limit
Break Ultra.
Who the hell
is Professor G?
Don't know.
All right.
I need a
refill.
In case you were wondering,
Canada Dry Ginger Ale, because it has real ginger in it. Supposed to be good for upset stomachs.
Anyway,
Mikey wants to take a look at FCX.
Let's take a gander.
At
and see what that looks like. Let's get out of here. We don't need this anymore. So I always tell everybody, if you're going to be serious, you need access, little fingertip, to some type of financial website. There's some information you should know about anything you plan on putting your money in. Do some research.
The thing is, when I first started back in the 90s, there was no access to information like this.
You guys
have it so much easier than I.
Matter of fact,
when I started, it was $250 commission to get in and $250 commission to get out.
So
you had to be right back then.
I seen it
go from $250 to $125. I remember that. I was all excited. Oh, great! $125, only $125 commission.
That was
back in the 90s.
And then it dropped, 75, 59,
69, 59,
35.
49, 35.
Yeah, now we're down to
free plus
platform
fees.
Huge difference.
Making money nowadays is so much easier.
It's like,
I wish we had this when I first started.
Anyway,
let's get out of here. Let's go back to where we were. Why do we have two? I don't need a second.
Whatever. Okay, so back to where we were.
Here we are, and
what did we want to look at next?
What did we look at next?
Mikey wants to look at
FCX.
Now, anytime I make any trades, I'm looking for.
Now remember, I told you this is great for a 9-year-old. So it's kind of like paint by numbers. I don't know if any of you remember paint by numbers. 1 is red, 2 is blue, 3 is yellow, 4 is green, 5 is dark green, 10 is black, blah, blah, blah. Little tiny squares, and you paint by numbers. Well, it's the same thing. 1, 2, 3, 1, 2, 3, A, B, C. First thing I want to do is the chart. The 1-year chart. It takes me 3 to 4 seconds to whether or not I want to look at it.
I'm looking for 5 things.
Now I can spot these 5 things in 3 to 4 seconds. 2 to 3 seconds.
It might take
you guys 3 to 4. Let me show you. Ready? 1. The high.
2.
The low.
3.
Where was it?
4.
Where is it?
5.
What's the direction?
Up, down, up, down. See?
3 to 4 seconds. Do I look at it? Not really.
Reason being.
Take a look here. There's your high.
There's the bottom.
It's currently in downward trend. But
yesterday
is the bottom. Today is one day to the upside.
Now every
stock
does the same thing. Argue all you want. Numbers don't lie. Down, up. Down, up. Down, up. Down, up. Down, up. Okay. That's what they do. They go down, they go up. Okay, so here's the high, it went down, it went back up, and now she's down here. Here's your new bottom. Today is 1 day to the upside. Look, went up, went up. 1 day to the upside today. I like 2 days to the upside. And then on the third day, if it continues to go up, then I will jump in on the third. Now that's my rule for me. You guys got to figure out what the rule is for you. Where do you decide to jump in? Because you've heard it over and over and over again. You make most of the money in the stock market buying low and selling high. Well, you can't get any lower than the low of the 30-day period, and that was yesterday. So there's a couple questions you need to ask yourself. Number one, do I like this company? Wait. Number one was, does it make sense? Number two is, do I like this company? Do I like this company at this current price? Well, this current price is $40.24. I like it at $40.24, but I'm not buying it at $40.24. That's only 1 day to the upside. That doesn't prove to me with enough clarity to have me invest my money into it. I want 2 days. So tomorrow's Friday. So if tomorrow is higher than today, great. I'll be looking on Monday to see whether or not it's a good time to jump in to FCX. So that being said, big number 44. The 40s are going for 52. Not quite there. Oh yeah. That's expiring tomorrow. This one. Oh hell yeah. That's over 2%. If I wanted to jump into FCX, it's offering me 2% for 1 week. Well, great. Bruno, what's happening? Greetings, my friend. Can we please see AMD? Advanced micro devices? Oh hell no. Starbucks? We'll take a look at Starbucks. But advanced micro devices, I'm a big fan. But we'll take a look at it. All right. So, Mikey, hope that answers the question for FCX for you. So that being said, let's look at what do we have next. All right, over here. Austin wants to take a look at GEV. Okay, Austin, what the hell is GEV? GEV. Okay. GEV. Vernova. What's that? Oh, that's a hell no. Did you see how quick that was? That chart popped up. I said, oh hell no. I don't buy it the high of the year. Why are you looking at something that's at the absolute high of the year? Never, ever been there before. Been studying and building my capital up, but I still pop in every now and then. Well, alrighty, Mary June. Cool beans. Sell after go up. Absolutely. Look at GEV and G. So we just looked at GEV. That's going to be a hell no. GE is that General Electric? Hell no too. Nope. Sorry. Austin, why are no? I don't buy at the high. It just doesn't make any sense. Buy low, sell high. Okay, I'm not saying anything new. Nothing revolutionary. As a matter of fact, you want to hear a funny story? Here's a funny story. Austin, I can't tell you that. Austin, I know absolutely nothing about you. I cannot tell you in good conscience what to do. Okay, if you think you want to take that profit and say thank you kindly, because guess what? Eventually, this will come back down. Because look, here we go. Watch this. Now, doesn't that look very similar to what we're looking at now? Low, way up. It looks almost the same, doesn't it? Well, let's go a little bit further. What goes up must come down. See that? What goes up must come down. Now here's I got a couple of funny stories for you. Now some of you may or may not remember this. But we all know gold is what? $3,000 an ounce now, something crazy like that. Yeah, I get it. Good dividend. Wonderful. Okay. But here's the thing. when you sell for a profit, you take your profit, you can put it in something else. When that stock comes down, as much as you love that stock, as soon as it comes back down again, turns around and goes back up, then you jump back in again. You take your profit, jump back in once you pulls back, and you get a little bit more profit. Take that profit, get rid of it. Once she finds a new bottom, turns around, goes back up, jump in again. So here's a funny little story. Now some of you may remember this. Most you probably won't. But back in the 1980s, gold was at like $250 an ounce. It was at late 70s. And then she jumped up from like $250 to like $800. It just like a rock shot up. And they had what the gold rush, gold frenzy. Everybody was taking their old jewelry and trading it in at $800 an ounce. Now it sounds crazy at this point in life. But here's the thing. At the high, I believe it was in the early 80s. From the high of the early 80s, the people who bought at the top in the early 80s had to wait. Not one, not two, three decades to break even. Three decades. So bought the stock at the high, or bought the gold at the high at $800 an ounce, whatever it was. I don't really remember. But it took 30 years, 3 decades for the stock to come back up to that level. 30 years. So you may like GE, you might like GEV, whatever the hell that is, but it's at the high. What happens if that happens again? If it drops and never hits it again for another 20, 30 years, are you okay doing that? I got in at 187. All right, Boston. Austin, Boston. All right, so that being said, let's go on to the next one. Next. Is it pink, brown, or trying to smash? All right, whatever. The Money Guy Show is another YouTube channel. Time in the market beats timing the market. A lot of people say that. Paul, every week at least 3 people tell me the exact same thing you're trying to tell me now. I need to flip my camera. See, if I flip my camera, Paul, you're looking at this. You ready? There you go. That's what you're looking at, Paul. Okay? If you think I'm technologically advanced and I know how to use all this stuff, no, I know how to turn it on. That's about it. I know how to turn it on and press go. Well, that's about it. You want something technical? Yeah. You either come here yourself and fix it for me, or just live with it. Okay? Now, I try to get my kids up here to help me with it, but they're busy. Check that out. Austin's up 235% on GEV. Now, Austin, you do realize that means absolutely nothing to me because, number one, you didn't tell me how much you started with. Number one, you didn't tell me when you started. Okay, so you might be up 235%, 253%. You could have gotten in 20 years ago. Well, that kind of makes sense. That doesn't impress me at all. Now, if you got in last week, well, that doesn't impress me at all either. Where's your consistency? What else have you done? See, people love showing, hey, I made a lot of money on this one company. I'm not going to show you the ones I lost on because that doesn't look as good. Well, I share all my trades. I share the winners and the losers. I got 7 accounts. I share 3 of them. You guys can take a look at the trades that I do on a weekly basis. As a matter of fact, I have a morning trading group. You guys actually watch over my shoulders while I trade. And they can ask whatever questions they want. That's part of the service that I offer. All right. I jump in here from Instagram because on Instagram it pauses sometimes. Yeah, Bruno, I see that. I don't know how to fix it. Okay, because the modem, the modem and the router are brand new. I can't say brand new. They're at least 3 months old. I got it brand new 3 months ago. All right, and it's literally 6 feet right over there. There's no walls in between. There's no lead shield. Batman and Superman and Captain America aren't there shielding the information from getting from one to the other. No, it's 6 feet and nothing's in between. So why is it not connected? Why is it keep being stuttering? I have no idea. Okay.
UPS. Doug Greer looked at UPS. I haven't looked at Apex. I haven't looked at Estee Lauder in a long time. Holy cow, Estee Lauder. I remember Estee Lauder last year had that big, huge right there. How many of you guys remember this? That big, huge drop in Estee Lauder. We saw that and we jumped in on that because it's Estee Lauder. You know? But she kept going down. She turned around and we all jumped out and took our little profits. But if it's a company you like and everything looks good and you're okay with owning, I'm perfectly fine buying Estee Lauder and holding on to it. And not at this moment in time, because look at this. If you zoom into the last 30 days, what about that makes me want to buy it? 30 days ago, the bottom shoots up, pulls back, now she shoots up again. It's at the high. I don't buy anything at the high. Never once have I ever heard anybody say, hey, Estee Lauder's at the high. Let's buy it for it to go high. Wait for it to go high. No. I've never heard that one. All right. Some more questions. What else we got? What can you say about prop firms? Ooh. I thought about doing prop firms. I did. But something about what they want me to do makes me feel like a trained monkey. You know what I mean? They want me to do this, want me to do that. I just prefer to make my own money. Your opinion on Amazon. Bruno, Amazon's not profitable. Okay. They don't have dividends. You can ask Jeff Bezos. He says, "No, we're not profitable. We've never been profitable." They have a lot of business, a lot of cash flow. So what low and when do you maximize dividends? Okay, Austin. I'm not really. There might be a little bit of a misconception or a miscommunication. I'm not looking for the dividends. I only use the dividends as a indicator to tell me when to look at. Remember what I said earlier? About the EX dividend calendar. It tells me when a stock is going to move. So if I'm looking at the calendar and it's telling me, hey, Caterpillar's paying a dividend in 2 weeks. Well, great. I will take a look at Caterpillar. Okay, what's the high? What's the low? What is the flow? What is the flow looking like? What are the buyers and sellers doing? Because we create all this bullshit. The market maker, he creates the starting line. He draws a line in the sand, takes a starting pistol, and says, go, open for business. That's what the market maker does. We decide what's too high, and we decide what's too low. That's our doing. The market maker, he just starts the race. So the dividend over here on the calendar, that tells me when to start looking at the stock. When I start looking at the stock, I want to see what is the motion. What are the other buyers and sellers? You know, what are you and I doing about that stock? Based on a couple of factors. Dividends coming up. Okay, because right around dividends is usually around earnings. So we have a good idea when that's happening. So we have this kind of information here. And then we see what direction is it going. Does it make sense? That's where it comes down to. Okay, Bruno, if we want to contact you by WhatsApp change some ideas and opinions, do you have Bruno, I just said like 5 or 10 minutes ago, I don't do WhatsApp. Don't do WhatsApp. I don't do Telegram. I don't do Snapchat. Okay? Facebook, Instagram, YouTube, LinkedIn, TikTok. A bunch of other channels, but I don't do those. I don't do Snapchat. I don't do WhatsApp and the other ones. Okay. Nettie. Back again, Nettie. How are you today? GG. Software. It's not software. It's a trading platform. It's called Think or Swim. It's available through Charles Schwab. Tennis Pro, dude. I haven't seen you in a while. How you doing? Nice to see you back. All right. Nettie wants to take a look at Procter & Gamble. But here's the thing. I love Procter & Gamble. They've been in business for over 100 years. 5 decades of consistent profitability. Look at this. Overall going down. Here's the high. Here's the low. Here's where it was. Here's where it is. Up, down. Here we are right here. Here's the bottom. Now the nice part about this is Procter & Gamble is now on my radar next week. Because it's Procter & Gamble.
They've been in business for over 100 years. You think about it, bitch, moan, complain all you want. No matter what happens in the world, we're always going to need toothpaste. We're always going to need dishwashing liquid. We're going to need dish soap. We need dish rags, toothbrushes, toothpaste. I already said toothpaste, didn't I? Consumer products. Paper towels. We're going to need all that stuff. Procter & Gamble. Johnson & Johnson. Companies like that. They've been in business for over 100 years. They ain't going anywhere. Think of all the crap we've seen over the last 100 years. World War I, World War II, Vietnam, Korea, Gulf Storm, the crap in Afghanistan, all that crap we've seen over the 100 years. And then we take a look at the crashes. You get 29, crash of 29. You got the Great Depression. The oil embargo of the 70s. You had the dot-com burst in the 2000s. The financial crisis in 2008. The pandemic in 2021. Yet this company and a whole handful of others are still consistently profitable. Why the hell not? It's been in business for over 100 years. But here we are, right here. Look, 1, 2, 3, 4, 5, 6. 6 down days in a row. But not only that, look at the whole year. The whole year is trending downward. That's why I won't look at the 1 year chart. The 1 year chart tells me what is the trend. Well, the trend is down. So you are not. Listen. Repeat. You are not going to be able to get a better deal on Procter & Gamble than the low of the year. Guess what? The low of the year is today. Now tomorrow it could go lower. Monday it could go even lower. And Tuesday it can go lower. Lower. But eventually, this thing is going to stop. Turn around and go back up again. That's the point. You want to keep your eye on. So tomorrow, maybe. Monday, maybe. I want 2 days the upside. So even if tomorrow is 1 day up, Monday would be the second day up. So Tuesday would be the earliest for me to jump into Procter & Gamble. But that's me. If you want to take the gamble and say, hey, I think today is the bottom of the year, and jump in tomorrow morning, you could do that if you wanted to. I don't look for the bottoms. I don't try to buy at the bottom. I look for them to tell me where they're going to bounce. See, bounce there, down, up. Okay, it goes down, finds the bottom, turns around, goes back up. That's all they do. Up, down. Not once is there a note saying, hold on, we took a vacation, we weren't here for a week, catch us later. No, stocks don't take vacations. Stocks don't take a break. Say, I'm a little bit tired of going up. Let me take a rest and go down for a little bit. Catch me in a couple of months. No, stocks don't do that. They go up, they go down. That's it. That's all. Here's the bottom of the year. Today. Does that make sense to you? Now, I'm not giving you advice saying you need to buy this. Hell no. You got to make up your own minds. Brad, consumer staples are basically a hedge in a bull market. Okay, thank you for that. Can you speak of the tax efficiency of your strategy? Roger Moore, how are you today? Okay, so Roger Moore, here's my thoughts on taxes. Are you ready? I'm going to make it as brief as possible. If you're having an issue with taxes, you have a problem with taxes, you need to do a lot of research. Okay, one, research what are the laws on taxes. The laws, not the codes. There's a huge difference between the tax code and the tax law. Huge difference. Okay? You are required by law to pay federal taxes. Not. Yeah. What's happening? Okay. We got a couple questions. Okay, guys, hold on to questions for a second. Let me go over my tax scenario. So when I say when you have to pay federal taxes, it's like when you pay for gasoline, that gas receipt, federal taxes right there. Everyone's gonna pay for that. Okay. You buy a set of tires. Right there. Federal taxes. Okay. When you buy firearms, cigarettes, alcohol, right on the receipt it says federal taxes. However, federal income taxes payable to the IRS. Here you go. You ready for this one? Number one, voluntary. Number two, any payments made to the IRS is considered as a gift. You don't believe me? Look in that big ass freaking book, 2,500 pages. It's in there. Any payments you make to the IRS is to be considered as a gift. Number two, if it's not in the Federal Register requiring you to do something, anything you are required to do by law in the United States has to be registered in the Federal Register. You go check out if the 1040 form is in the Federal Register. If it's on the Federal Register, you're not required to do it. Now, I'm not giving you tax advice. I'm just saying, do your own research. But if you want to pay taxes, there's nothing wrong with paying taxes. Everybody needs to foot the bill for the Federal Reserve because, hey, they spend money responsibly for all the stuff that we have. I remember President Reagan coming on back in the 80s and says, every single penny you pay to the IRS goes to pay the debt of the Federal Reserve. Not a nickel goes to anything for the general public. Reagan said that back in the 80s. So that's about as far as I'm going to go. If you're having an issue with taxes, you need to talk to a tax strategist or a tax planner, not an accountant, not a bookkeeper. They are paid to file the taxes. Tax strategists will tell you how to legally not pay taxes. That being said, I hope that answered your question on taxes. I hate that question. I would rather have capital gains that I can realize at a lower tax rate than dividends. I'd rather not pay taxes at all. Use your 7725255. Why can't your parents just give you a normal name like Bill? Ted.
Drift happens. That's a joke.
I didn't get that joke.
Mindy.
It was the daily option that intrigued me. Yeah. It is very intriguing if you understand it.
Cub fan.
Dividends are taxable. Okay.
I don't get
in conversations about taxes because it does nothing but get people in problems.
Cub fan,
do some research.
Check out.
Here's a good one for you, Cub fan. You ready? ROE. Revocation of election. At some point in your life, you decided, hey, it's a great idea for me to give some of my money to the Federal Reserve through the IRS. You signed a form at some point in your life saying, I agree for the rest of my life to give you a portion of my money.
You did. You
agreed to that. You agreed to give them at some point.
You elected
to give them money.
So
in order to unelect to do that, it's called revocation of election. You can look it up.
So you file a
little form, say, hey, thank you, I understand, I gave you all this money, but I don't want to give it to you anymore.
It's your right. Okay. Right, but anyway, let's get off that.
Jackson wants to take a look at SCHD. Now, Jackson, I'm going to tell you the same thing I tell everyone else.
Okay, let's go. SCHD. Now let's check out how wonderful SCHD is with their profits. Dividends only. Look at, we're going all the way back to 1999. Holy cow! SCHD. All right, 14. So wait a second. Hold on. This one goes to 2011. If my math is correct.
And I'm going to apologize because I didn't go to college. I passed less. I got a high school and I joined.
Okay. I left the army. I went and I did my own business.
I was a manufacturer. You believe it? I was a CEO. Who's stupid enough to work for me?
Anyway,
I did have my own manufacturing company for about 13 years.
So let's take a look at this.
2011 was the first dividend from SCHD. Well, that's only 14 years. Now, if you want to bend the rules a little bit for a company that's consistently profitable for 14 years, fine. Let's take a look at this.
So in 2011,
the very first dividend was 4 cents.
The second one,
4.6.
Okay.
6.8, 6.9, 8.6. Wait a minute. Why did it go from 8.6 to 6.6? That's a 25% decrease. Now, I don't know about you, but a 25% decrease. That's not a good thing. Let's look this way. Let's say hypothetically you get $4,000 a month from your pension, Social Security, and what do you call it? Your pension, $4,000 a month. 25% decrease is $1,000. So instead of getting $4,000 for the month, you're getting $3,000. Explain to me in a manner why you think that is good. As a retired person, I need what is called fixed income. So when it is at 8.6 and it drops to 6.6, that is a 25% decrease. So SCHD, not consistently profitable. But hold on. Do a little bit more, but first I gotta fix this over here. This is one of those picture things. Prove you're real. Move the slide over to fit the puzzle. Right there. There we go. All right. So 6.6. 7.5, 7.7, 8.3, 8.2, back, not a huge amount. 8.2, 8.9, 8.4, backwards again. 9.1, 9, backwards again, not huge. 10, 9.9, 9. 9.9, 10.5, 8.1, that's a 20% drop. 13, 10, another 20% drop. 11, 11.4, 11.5, 8, that's another 25% drop. 13, 12, 13, 11, 14, 16, 15, 14. There's no consistency here whatsoever. Jackson. No consistency whatsoever. But hold on. It gets worse. Let's go to the summary. See how well they have done for the last year. Because the numbers are going to be right here in the summary. It's also going to give you an idea of the projection this year. So far. Here we go, right here. Schwab, right there. Yield 3.87. Well, it's a hell of a lot better. Than SPY. It's 3.7%. 3.8. 3.8 for the year. Well, it's a hell of a lot better than the Qs. Remember, the Qs were only giving it. And SPY was giving 1.3, whatever. Well, this one's giving 3.8. But look at the yield. Year to date, daily total return. Point. It's not even a full percent. It's 0.11. What the hell are you thinking? Do you even check these numbers before you invest your money? Seriously, think about it. It's offering you 3.8%. You might like that, but so far this year, we're in July. As a matter of fact, tomorrow is August. So tomorrow we're in August, and this thing's at 0.11 for the year. Point. One. Yeah, never mind. I was going next. Why would anyone invest in a bond that isn't a 20-year history of payouts? You're absolutely right. I'm going to agree with you 100%. Why would you invest in a bond that doesn't have 20 years of history payouts? Sell losers to reduce taxes. Probably better to talk to a pro about it. Though for your own unique situation, hope that helps. All right. Thanks, Apex. Okay. Nikhil. Nikhil. What is this? What is los? What is this man? I'm just some random guy on YouTube, dude. That's it. Don't pay attention to me. I don't know anything. I'm just here to say hi to my kids. How you doing? No. Seriously, I am. Okay. At some point in time, I'm no longer going to be here. But before my children can inherit anything from my estate, Bonnie, thank you. Before my children can inherit anything from my estate, there's going to be a huge amount of hoops to jump through. Okay, I didn't get anything from my parents. I can't.
I ain't gonna get
anything from my father. I know that. My mother, well, she's going to take hers and then spread it out through all 6 of them. So I'm going to get 1/6 of whatever my mother's estate is. Now, my mother's a single mother in the 60s and 70s and 80s. Okay?
She
She doesn't have anything.
Okay, I
bought her a house back 30 years ago
for
$42,000.
Okay, because she
had enough money saved up. She said, "Find me a house that I can afford."
So
30 years ago, I found her a house for $42,000, and she's been in that same house. And she's
so happy
there. She says, "James, I'm so happy my house. I can afford it on Social Security. She gets like $1,200 a month on Social Security, and she can afford the house that she's in." Fine. So I'm getting 1/6 of that.
Less what
the mortgage is. And then I got to share it with my brothers and sisters.
Is what it
is. I have to rely on what I came up with.
What do I think
about the YBTC?
Well, let's find out.
Let's go right there. YBTC.
Hell no.
Was that quick enough for you?
I don't do monthlies.
Now remember what I said earlier?
I'm looking for
5 things. Okay.
Never
buy something you don't understand or you don't want to hold on to. Never sell at a loss. Make sure the company's consistently profitable.
Rule
number 4.
Weekly
options
only. Now.
15 August, 19 September, 19 December, 20 March. Those are months of the year. That means that is a monthly optionable stock. Now you may like it, fine, perfectly good. I don't do monthlies. The numbers just don't work for me.
Okay,
I'm looking for 1% every week. The only way you're going to get 1% every week with this company is to sit in front of your computer every day looking for a setup, time to jump in, time to jump out, make your profit. You're trading your time for money. No, thank you. I did that years ago. It's not what I'm looking for.
Kathy,
how are you today?
All right,
let's keep on going. Victor, TTI. I have no idea what that means, Victor. Can you explain that?
Because I get 6 channels going here, Victor. When you ask a question or you make a statement, you got to give me the full statement or the full question in order for me to actually be able to do anything with it. All right. So let's keep on going.
So user 474341 blah blah blah. I'm going to call you Peter. Peter ETF YBTC. I don't do monthlies. It's going to be a no. It's a no. Marlon,
how you doing?
Big kid. What's going on?
Corona
Blaze. Chase Willis. Good evening. Phil. Good evening. Tommy Gold. Health wellness guy.
Nettie.
Just got the Thinkorswim today. Woohoo! Now, Nettie, if you're going to download Thinkorswim, make sure you download it onto a computer. Do not use the online version. Do not use the mobile app. Looks absolutely nothing like this whatsoever. I've tried it years ago. Just a little clunky.
When
would you enter University of New Hampshire? Gene. University of New Hampshire. UNH.
Was that United Health Group, something like that?
I wouldn't. United Health Group.
Think about it, right here. Here's your high. Here's your low. Here's where it was. Here's where it is.
Look at the motion.
Sideways,
up,
down.
As soon as it stops, maybe.
Okay.
What I would like to see is this thing consistently. UNH.
United Health Group Incorporated.
Health.
Okay. United Health Group. All right. You got a yield of 3.3%.
Better than anything else we see today. Anything else we
the next dividend date is June
16th, 2020. That already went by.
Okay, they got a 1-year target of 336. PE ratio,
earnings per share, blah 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 blah. Interesting.
All right, well let's see
how wonderful the dividends look.
Why is
wording backwards on YouTube and not on TikTok?
Kathy,
YouTube doesn't give me the opportunity to mirror the image. TikTok does. Because it's just a little app. You just press it, click the button, mirror the image, and then everything looks normal. Well, YouTube doesn't give that to me. Sorry. All right, so UNH. Let's take a look at the historical data and see if this company is. Is that what this is? Combustible monkey. Interesting name. Yeah. Combustible monkey. We're looking to invest in dividend stocks for weekly cash flow using a simple, safe, predictable, consistent 1% per week strategy. That's over 50% per year. 50% per year. 50% excites you. Well, you got to put some effort into it. AACC. What's going on? Okay, so let's take a look. At the dividends for UNH. Somebody likes University of New Hampshire. Dividends only. Dividends only. All the dividends. So let's take a look. What do all the dividends look like for the last two decades? That's my goal. My 12. There it is right there. 2005. Right there. Okay, so right. 2005, it was 1.5%. Okay. 2006, 3 cents. Doubled. Okay, it's a 100% increase. I like that. 2007, no increase. 2008, no increase. 2009, no increase. 2010, no increase. So we just went 1, 2, 3, 4, 5 years. With no increase with the profitability whatsoever. Now, I don't know how you guys feel about that. It makes me a little queasy. Let's give the benefit of the doubt. Okay, so 3, then I went to 12 and a half. 16, 21, 28, 37, 50, 62, 75, 90, 108, 125, 165, 185, 210. Now we're at 221. Okay, so a little slow start, but they're consistently increasing over the last few years. Okay. Do you like that? So back to UNH. So here's the last 30 days. Hold on, I gotta prove that I'm normal again. There we go. There. All right. So here's the last 30 days. A 30-day high, 30-day bottom. We're at 249 at the moment. So they do have a nice amount of dividends. Fine. They're at 249. As soon as we have 2 days to the upside, the third day will be the time to jump in. Now look at this right here. Last week, 2 days to the upside. Now some of you might have jumped in on 2 days to the upside, but the third day she pulled back, which means not quite done dropping. So as soon as it finds the bottom, turns around, goes back up, fine. Right now we're at 249. The big number, 249.56. Remember I tell you one number we're looking at, 249.56. Well, the 250s are going for 235 for 1 day. That's tomorrow. It expires tomorrow, but it's still offering almost 1% for 1 day. So next week, the 250s are going for 560. That's 2%. If you like 2% every single week, that's over 100% for the year. I'm going to sit down for a little bit, answer some of these questions. Okay. Roger Moore, I have been selling at the money covered calls for 10 years and never approached 52% total return as you claim. How can your claims achievable? Roger Moore, glad you asked, because you know what? I was concerned about that myself, and I've been losing sleep for the past 15 years because I don't know how I could possibly. Let's go back. Now, remember, Roger, I said I got 7 accounts. I share 3 of them publicly. Here's the website right there. Trader. Read along with me if you feel like. Okay. Simple, safe, predictable, 1% per week. Live nightly training, 9 p.m. Eastern. Well, isn't that what we're doing right now? Yeah, I think that is. Hold on. Let's go down a little bit lower. about us.
About us.
If you're
looking to strike it rich overnight,
this ain't it.
this ain't it.
My main
focus is simple, safe, predictable, and consistent 1% per week. That is over 50% per year. So I'm kind of on the same page with you here.
Now,
the video right there explains you no risk trading explained. You can look at the video yourself. Now, here's a good one for you. Investing your money shouldn't be difficult. Stop making it more complicated than it needs to be. Ooh. That sounds interesting. But that's not what you want, right? You want right here. Look at this right here.
So when it come up to the
So when it come up to the hamburger in the top right, top left, I don't
click
know.
on that right
Click
there.
on that right there.
And the weekly trades for 2024,
they're all there.
The weekly trades for
2025, they're all there.
Let's take a gander at it, will we? Now, as you foresee, Roger,
account one, account two, account three.
Now,
account one,
151,
124. That's 151.
So
1%
of
of 151 is 1,500, right?
Keep that in mind.
Keep that in mind. Account number two, 143. Well, 1% of 143 is 1,400. Keep that one. Account number three, 114. That's 1,100 bucks
for a week.
Okay, so
let's slide
all the way down
to
the bottom so we can start looking at
week
one,
quarter
one.
Okay, that would
Okay.
be
That's 16, 15, 14, 13, 12, 11, 10, 9, 8, 7, 6, 5, 4,
3, 2, 1.
Here we go.
Ready,
All right,
Roger?
ready, Roger? Here we go.
Week
one, quarter one, December 30th through January 3rd. Account three, account two, account one.
Each
one of these, you can click on it.
Bingo!
There you go. Now remember, Roger, remember when I said account number one had $151,000, which is 1% of that, $1,500. Look at this, Roger. Zoom in really close and look at this, would you? 1/2/25. That's January 2nd. Well, let me go over this side so you can see me. Okay, 1/2/25. That is the date. 10/31/51. That is the time of day. That's the timestamp right there. Okay, calendar. I hope you know what a calendar is. Okay, 10 contracts right there. This is the first one. Are you ready? X, US Steel, 32.50 call option. I bought this one, I sold that one, I got a credit of $1.58. Now, you may not understand what $1.58 is, but let me explain. $1.58 is $1.58 per share. How many shares do I have? I have 10 contracts. This is just the first red line. Not any of these, just the first one. 10 contracts. Now, 10 contracts, if you didn't know, one contract is 100 shares. So 10 contract is 1,000 shares. So let's do a little bit of quick math. 1,000 shares multiplied by 1,580. Guess what that comes to? $1,580 just on this one trade. So if there is $151,000 in this one account, this one trade, $1,580. Just that one trade. You want to see the rest of them? Trade number two, 10 contracts, 158. Another $1,580. Number three, 16 contracts at 148. I can't do that on the top of my head, but let's bring the calculator up for that one. That's worthy of a calculator, right? Okay, 16 contracts. Okay, clear. 16 contracts is 1,600 shares. 1,600 shares at 16 right there. $1.48 per share. See, $1.48 per share. So multiply that by $1.48 per share. Grand total of $2,368. Now you're curious, how do I get 1% a week? Well, that's more than 1%, just one trade. That one right there is another more than one trade, 1%. This one right here, we're at 1, 2, 3, 1,500, 1,500, and this one is 2,300. Do you really want to do this for every single trade that I did this year? Really, seriously. Okay, so let's get out of this one. Okay, so to
sum it up. Week one. Quarter one. December 30th to January 3rd. Account one. Every single trade's there. 9,341. That came to a 6.1% for the first week of the year. Account number two, 1.82%. Only made 2,600. Account number three, 4,800. 4.23%. Now, do I make that every week? Every week? No. Account number two. Sorry. Week two. Count one, 2.3. Account two, 1.7. Account three, 1.8. 1.8, 3.6, 4.8, 2.3, 2.0, 3.3, so on. They're all there. Okay, Roger. HTML code on a screen is no proof. You can bite my ass, brother. Okay, right here. Here. You'll like this one. All right, before I do this, I'm going to take this and slide it over here because you really don't want to see my... Well, not that you want to see it. I just don't want to show it. I just don't want to show it. Sign it to here. Sign it to in. Give me a second, Roger. Okay, now. Okay, now, do you understand what this is, Roger? Get that damn thing out of there. Okay, I don't want that either. Okay, Roger. Count to performance. Okay? Portfolio performance. Okay, we want to take a look at month of July 2025. July 1st. Okay. July 1st, 2025. See that? July 1st, 2025. Rate of return. July 1st, 2025 to July 30th, 2025. 6.7% for the month of this year. Okay? I can do that every single month if you really want to see it. Okay? And it's not HTML code, brother. That is... Charles Schwab, accounts, trade, research, blah, blah, blah. Here's the website right there. You can check it out yourself. Other than that, you can bite my... Well, I won't. That's a nice thing to say. So, I'm not here to convince you of anything, Roger. I'm not. You can take a look yourself. UNH. Let's take a look. 249. So let's get out of here. Let's take a look at a covered call. Right there. And let's not do this one. Let's do this one right here. $250. Let's do one contract. One contract. There we go. I don't like limit order when I'm entering. I like market order. Reason being, first thing in the morning. The market opens up at 9:30. Guess what? Market orders get filled first thing in the morning. First thing in the morning, I'm going to buy 100 shares UNH at the market. Don't really care what it is. Don't. I'm going to sell at the exact same time someone the rights to buy it from me for basically the exact same price I just paid for it. Now, I do understand, so don't give me a hard time that the numbers that are shown at this moment in time aren't going to be the exact numbers that open up in the morning. So, sit tight. Hold on. That's the order. So, let's confirm and send. And I'm going to read it to you. Ready? Buy one, covered call, UNH 100, which is the weekly. 8 August 25. Now, 8 August 25 means this option is going to expire between now and next Friday. So whoever buys this from me has between tomorrow morning when I buy and they sell it, between tomorrow morning and close of business on Friday, next Friday, 8 August 2025. The $250 call option against UNH stock at the market to open. Now, I didn't stutter, and no, I didn't repeat myself. To open means there's two trades here. I'm buying stocks. That's going off to New York. I'm selling the options. That's going off to Chicago. Now, I do this because the stocks and the options are tied together. I already know what my profit is going to be close to the T. Now, remember when I said simple, safe, predictable. Remember I said earlier that the stock doesn't even have to move at all, and I'll still make my profits. Ready? Here we go. break even, 243.92. Well, the stock is at 249 at the moment. Break even is 243. So as long as it's above 243 by next Friday, I'm going to be in a profit. However, if she turns around and goes back up, I'm okay with it. She's at the bottom of the year. I'm golden if I'm right. Hold on. Let's keep on going. Maximum profit, $607 per contract. If you can afford one contract, great. If you can afford 500 contracts, even better. But to find out your rate of return, you take the profit, $607.50, and you divide it by your investment. Cost of the trade, including commissions and fees, $24,393. Now, yeah, HTML and all that crap can be fake, but could I really do it that fast? You really honestly think I'm that good? I can't figure out how to mirror my screen, but you think I can create that crap on a whim? Let's keep on going. Calculator, come on down. We need your assistance. Here we go. All right. So we're going to take the profit. $607.50. $607.50. To find out my rate of return is going to divide it by the investment. $24,393. And for those that are really petty, 16 cents. Now, gives me a grand total of, are you ready for this, Roger? 2.4% for 1 week. Hold on. It actually gets better. It really does. So this is 2.49% for 1 week. Now you're saying I can't get 1% a week. Well, I can, and I have been. Okay, I have. Oh, wait a minute. I'm going to show you this in a second. After I do this, I'm going to show you something. Sit tight. 2.49%. If it was an all cash account, but I have margin. I've been trading long enough. I have a very good margin. So let's see what that looks like. Are you ready? Same thing. Profit. $609.50. But instead of investing in cash, I'm going to be investing what I'm paying for myself because I have a margin account. Now, I'm going to stop here for a second because I got to say this and I got to say it very slowly. Never, ever use margin unless you understand the risks involved of investing other people's money. Because margin is someone else's money that they're giving you to trade. But they're charging you for it. Now, I get no problem whatsoever paying 8, 10, 15% of margin money because I'm making 40, 50% every year. Yes, Roger, every single year for the past 15 years. All right. 607, I'm going to divide by this number right here. Now, Roger, how did I do this one? Just happened to pop up. Buying power effect. 11,091. So let's do that. Same profit, 607 divided by margin requirement, $11,910. And for those of you that are really petty, 65 cents. Gives me now a total of 5.1%, Roger. 5.1. Okay. Did I do this all by myself? Yes, I'm magically awesome. I get a whole group of people here throwing together HTML code to prove to you that yes, this can be done. I really honestly don't care what you think. Okay, seriously. Okay, what you think of me is really irrelevant to me. I'm doing this so that my children and my grandchildren at some point in time. This is the point I wanted to get to. Right here. Okay, let's go to here. Let's go to this one. And then we're going to slide all the way down. All the way down to the bottom. This is all my trades for 2024. All the way down. But look what we have at the very bottom, Roger. Check this out. Now, I've been doing this for a very long time. However, the first time I came online to share my information was August 31st, 2011. My very first blog post, because that's what was common back in 2010, 2011. My very first one, right there. Okay. This one right here says week 26 total, July 6, 2013.
Year-to-date profit and loss, 47,000. Ooh, that's nice. There was a huge drop in the last few weeks. Took a break from trading, waited for the dust to settle. We didn't take any losses as of this year. We're looking for a no-loss approach this year. So we're doing pretty good in that one. We dropped down to only a 20% return so far. We're only into July. I'm at 20% in July. So far, halfway point, and our weekly averages dropped below 1%, with our monthly average at 3.3. Blah 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 blah. But you can take a look if you can dig deep enough and find them. Here's one for you right here. I don't know if you remember this one. Rent to center. Look at this. The one-year chart, the 90-day chart, the 30-day chart. Moving sideways all year. Last 90 looking to challenge the close of the year's high. Last 30 still in the channel, looking for the dividend to push it upwards. March 23rd, 2013. Roger, I have over 1,100 videos online, all basically saying the exact same thing. Terribly sorry if you haven't found it before. I have no idea how to do this marketing crap. This is just a hobby for me. It's not a profession. I did this in my part-time. Well, I used to. Now this is all I do because I retired 2 years ago. So I'm terribly sorry, Roger, if you don't believe me. Lost your cool, my brother. No, I didn't. I just like getting excited because idiots like you come into some place with not knowing anything, and automatically you think you know exactly everything. Now I know that I know nothing. That was Aristotle said. The only thing I know is that I know nothing. I do. I know that I'm not very good of a trader. I'm a very lazy trader. But I did find a strategy that worked for me and worked well. Yeah, marketing. No, I have no idea how to do marketing. Okay. If you look, I have like 50,000 followers on TikTok. On YouTube, I have maybe 5,000. And I've been doing this for over almost 15 years on YouTube. Okay? So marketing's not my thing. Bro, did you lose 6% today? I didn't lose anything. So best SPY live trading. So here's the thing with profits and losses. Number one, it ain't a profit until you take it. Number two, it ain't a loss until you take it. Just because your stock drops, if you refuse to accept and take that loss, it's not really a loss. It's not. If I bought Rent a Center at $100 and it dropped down to $50 today, did I lose money? No. I only lose money when I agree to sell it for less than what I paid for it. Rule number two, never sell at a loss. Rule one, never buy something you're not willing to hold on to the day you die. If I bought Rent a Center then, I'd still own it. But it just happened to go past the point of my profit. Okay, so if I buy it at 100 and it hits 101, I'm going to take that profit because that's the 1% I'm looking for. And then I will look for it to go back up, back down, and get jumped back in again. Marketing and not selling anything. Do you see the contradiction? Roger, I have no idea what you're talking about. Okay, I'm not trying to sell you anything. Okay? I'm pretty plain and upfront about that. Do I have stuff to sell? Yeah, I do. I've written 14 books. I got the home study course. I have a live trading group that people pay me to watch as I trade. I have those services. But not once will you hear me in front of you saying, hey, this is a great thing. You got to buy this. You got to buy that. No, I don't do that. I'm sharing for free the information that I've gained over the last 20 years. Like it not, believe me or not, I really honestly don't care. I'm not doing this for you guys. Now, some of you appreciate it, and some of you are thankful. And I'm glad that I can help some of you out. But I'm not doing it for you guys. I'm doing it for myself, and I'm doing it for my children and my grandchildren. Okay? I'm not going to be here in 20 or 30 years. But guess what? The stock market has been around for 420 some odd years. The first dividend stock was sold in 1602. We are in 2025. That's over 400 years. I'm not delusional thinking I'm going to last forever. But you know what? I have videos going all the way back to 2012 watching me do this exact same thing. So if my children, grandchildren, great-grandchildren come across this and say, hey, I want to learn what Papa G did. Because here's the thing. I know for a fact when I'm gone, I am literally leaving millions upon millions of dollars for my children and grandchildren. But they ain't getting a penny until they can prove to the executor of my estate that they know what to do with the money. That's what all this video is for.
for them to watch Papa G. Hey guys, how you doing? Right? That's what I'm doing, Roger. I'm not looking to sell you anything. If you want to buy something, you're an adult. You know how it works. You go to the bio, you go to the website, you buy this, you buy that. I'm not trying to sell you anything. I'm only giving away free information. I only give away one. Okay, I know a lot of trading stuff. I know a shitload, but I'm only giving away one because it's free. It's simple, it's safe, it's predictable, and it's what started this whole journey 15 years ago. My 9-year-old said, "Daddy, what are you doing? Can you teach me?" Here it is. Giving it to you for free. And what do? You insult me. Tell them about the bonds. What bonds? Yeah, my company is going to be selling bonds in the next year. And we're going to guarantee 20%. And unfortunately, he's right. He said never buy a bond for a company that doesn't have been consistently profitable for 20 years. He's right. But you guess what, Roger? You can't get to year 20 until you get to year 1. Year 2, year 3. Now, you guys are here at the formation, at the pre-formation. Okay? So the company is about 2 years old. But I can't legally sell anything once I go public. Once I go public, you won't see me ever again. Because legally, I can't do it once the company is registered. It's not. This is just the build-up. This is just the foundation. Okay? So I plan on spending the rest of my days, because I got nothing else to do. I don't have to work anymore. My investments pay all my bills and helps out my kids. So if they need money, I help them out if they deserve. I'm a dick when it comes to money. Because I grew up dirt-ass poor. We were on welfare in the 60s and 70s. I didn't know I was poor until my classmates in junior high. The elementary school kids, they don't care. But in junior high, yeah, you wore those pants yesterday. That's the only pair I got. You know, we had play clothes and we had school clothes, and then we had Sunday clothes. Nowadays we just have clothes. No. Back in those days, we had our play shoes, we had our school shoes, we had our play clothes, we had our school clothes. Okay, so hopefully that satisfies your curiosity, Mr. Roger. I'm sure other people out here thinking the same thing. But yeah, you're right. My company is going to guarantee 20% on the bonds, paid monthly. Not 20% monthly. 20% simple interest. Now this compounded shit. Okay, I know. This is what I do. Okay, I trade. I know what compounding can do. So if 20% is 20% simple interest, and you get weekly. Now I'm not trying to sell anyone anything. So no, I didn't try to sell anything because you can't even buy them anyway. Because they're not ready to be sold yet. So that being said, hope it worked out for you. Can you pick up a premium of you don't sell if you don't sell in 40 days? No. Okay, so Andrew, anytime you do a covered call, like the sample I just showed you. First thing tomorrow morning, I'm going to buy that stock, UNH. It was just a sample. I didn't actually do the whole thing. So you guys can see how the mechanics work. And yes, if you're curious, this is recorded, so you can go back and rewatch it. Okay? Every single time I do a video, it's recorded, and it's recorded on YouTube. Now, 10, 15 years ago, 10 years ago, I started deleting some of those because nobody was watching them, so I started deleting them. Nowadays, I'm not deleting them, I'm just leaving them. Not very many people watch them, but they're there. So what was I saying? So tomorrow morning, the sample I showed you. Tomorrow morning, I'm going to the order I sent in. Buy 100 shares UNH. That will get enacted as soon as the market opens 9:30. As soon as that is filled, and it's market order, so it's filled instantaneously. Quick. As soon as that's filled, the option orders. Excuse me. The option order is filled because that's at the market also. So the money from the premium from the option I sold gets credited to your account that same day. You can't spend it the same day. You get to spend it the next day. So I actually have a credit card and a debit card and a checkbook attached to my trading account. Because guess what? My bank pays me crap for the money sitting there. But my trading platform pays me 4% for the money just sitting there. So figure it out yourself. I know exactly what my bills are. I'm 61. I know what my bills are. My mortgage, my rent, my car, my insurance, my entertainment. I know what all that crap is. So I know when my money comes available. On Tuesdays. Because Monday I buy and sell my stocks. And then the option money gets credited to my account, and now I have money to spend and pay my bills. If it's not paying my bills, it's actually earning me money. I have almost no money in the bank.
Getting all worked up. All right. Alacran, what's happening? Victor.
It's a
stock ticker, TTI. What do I think about it? Let's go check it out. Let's get rid of that. So,
hoping, Roger,
that I showed you. I walked you through a covered call scenario. Now remember, Roger, I don't buy anything unless it's consistently profitable. That's number one. Has weekly options. That's number two.
Okay, and
then when I say consistent profitability, I'm talking 2 decades.
Okay,
the market's been around for 400 years. There are companies that are consistently profitable. GPC, Genuine Parts Corporation, has increased its dividends for seven decades. I'm not even 70 years old, but this company has consistently increased its profitability for 7 decades.
There's a whole bunch of companies that are over
100 years old that are still consistently profitable and still consistently pay dividends. And the premiums are still, some of them, a 1% or more every single week.
So am I
buying a stock? No. I'm investing into a cash, a weekly cash producing asset.
Think of it as a
vending machine, a soda machine, candy machine, cigarette machine. Who remembers those? Anyway, a vending machine. You pay $10,000, $15,000, $20,000 for a brand new vending machine.
Okay, you
come by once a week. You take the money out. That's your return. Your investment, $20,000 for a new vending machine. This week it's giving you $600. Awesome! What's it give you next week? Probably ain't gonna be $600. Maybe it might be $500. What's the big deal? So buy and sell weekly, not dividend income. Absolutely, Austin. Are all your accounts with Charles Schwab? No, I actually have one or two of them with Robinhood. I love Robinhood. I do. It's right there on my screen. I make more money on Robinhood than I do on Thinkorswim. I had to do some crazy stuff on Robinhood. It's right there. Okay. I can be sitting in traffic. A couple $100. Yay! Excuse me, I gotta use the bathroom. Couple $100. I think I made a couple $1,000 this morning. I love that, Robin. We are actually going to start a new channel specifically for Robinhood and for those who don't have a lot of money. So trading strategy I'm going to come up with is the one I came up with my grandson. And my grandson's 5. He doesn't know anything. Now, some of you may have met him because he does every once in a while come up as a guest. He is so much fun. He is a ham. You point a camera at him, he's like, he's all for it. 5 years old. He's got no problem talking to strangers. He loves it. 6 cameras right there, and he can see himself in all front of the cameras, and he can see all the questions popping up. He's fun. He is. So the Robinhood one. It's for those people who don't have a lot of money. Okay, and it's be kind of like a spare change challenge with the parents and the grandparents. So the grandparents and the grandparents can get together and have a common interest with the grandchildren. My grandson thinks it's great. He comes over every once in a while. The first thing not the first thing we do, we get him settled in. But every time he comes, we take that little change jar, we dump it out, and me and him sort through it all. Well, I actually, at this point, I do all the sorting and all the counting. He just plays with them at this point. But I want to include him in it because he thinks it's fun. And at some point, he's going to start counting. At this point, he's not. He's just having fun. But at some point, he will. So for those who don't have a lot of fractional shares and dividend, it's a great simple strategy. It's the oldest strategies there is. You buy the stock, you get the dividend, and then you sell the stock and you go and get another one. Doesn't work for every single company though. There are other certain criteria you got to take into consideration. All right, so let's keep on going. What else do we have?
Jacob, 15 years.
Thank you, Jacob.
Thank you, Jacob. I'm not quite sure what that means.
YBTC.
YBTC is a weekly. No, it ain't. YBTC.
Okay.
Now.
Who said?
Okay.
User
4743. Why can't parents name people normal names? YBTC 15 August 19 September 19 December 20 March. Brother, that is what is called a monthly optionable stock. That is a no. It's a no. I don't do monthlies. The numbers just don't work. Do you allow people to join your group and understand the trades that you decide to make each Monday? Brad, my trading group. Now remember, I promise I'm not going to try to sell anything. Brad, the morning trading group is Monday, Tuesday, Wednesday, Thursday, 9 a.m. until we're done. Okay, the shortest one I've ever done is 45 minutes. Longest one I ever done was about 3 hours. I will stay on until you guys are done asking questions.
Okay,
so I trade 3 accounts, which the 3 I showed you, which I share publicly.
I
share those. Okay.
And you get to ask
me any questions you want.
But I remember
I said I'm not going to try to sell you anything. So I'm just telling you. He asked the question, so I'm just telling him what it is. You can pick up the premium of. Okay, yeah, got that one.
Madeline,
I want to make money like you. Teach me, keep showing up. Madeline, you're new here.
Okay.
Now I tell this to everyone. You're new here. If you really want to have a conversation, when you send me your number, I will give you a call personally.
When I say,
excuse me,
I'm still getting
over this illness. Whatever. When I say I will give you a call personally, send me your number with a DM. Don't put it here on the screen for everyone else to see it. Don't put it in the chat for everyone to see it. We're all adults. We know how it works. You go to the bio, you see where the link is to my web page, and then you just put, you send me the information that way. And that way I'll give you a call and we'll have a conversation. And I promise you. Okay. Now I don't know. You guys don't know me. But you hear what I'm saying, and I hope you think that I'm sincere when I say this. If you give me your number one, I will not ever use it again. I use it once and then I delete it. I don't save numbers. Okay? I do save emails because guys are interested. So why not? But you can always unsubscribe to emails if you don't like them. I don't even send out emails. I got an email list, but I don't send it out because I don't know how. So what I'm saying is, I hope you think I'm sincere when I say I will give you a call, and I guarantee you I will not try to sell you anything.
Okay, we're
all adults. We know how it works. I've written 14 books. I got all that crap. But I'm not trying to sell you anything. I'm just sharing information. I'm at the point in my life where I come to the realization that I don't want to take what I have up here to the grave with me. I want to share that with people. So yeah. You see, what do I have? About 1,100 videos. Okay, I did over 900 podcasts until they changed the podcasting. It's like you want me to do this, and this. No, no, thank you. I'm not trying to jump through hoops to do something that was simple. Open up the app, press play. There we go. Simple. Now it's no, thank you. Okay. Here's a funny story. You ready for this one? This one's really funny. I was in my hometown. And my hometown, it just so happens to be the same place where Steven Tyler lives. The singer of Aerosmith. So anyway, I bumped into Steven Tyler once. Me and my girlfriend, and she said to me, she used to own a restaurant. She said, Steven, I used to make breakfast for you all the time. You and the band, would come in, and we would leave you alone. And he said, yeah, well, we appreciate that because in my hometown, Steven is just Steven. Nobody makes a big deal out of it. He walks on the sidewalks, and nobody approaches him. Everybody leaves him alone. So here we are one day. She says, I'm getting older. And for years I made your breakfast. I said, can I get a picture with you? Never ever has she asked for a picture, Steven. So she hands the camera to Steven. He said, I'm technologically retarded. I can't figure these things out. So hands the camera to his daughter. My girlfriend says, yeah, technologically retarded too. So he's a great guy. He just talked like normal conversation.
Anyway,
Anyway, besides the point. I actually did an aquarium firm once, because that was my business years ago.
Anyway, so
let's get back to where we were. Where are we? Judy sent me a message.
There you go.
See, Judy knew how to do it. Funny thing is, you send me a message, it pops up on my screen. So whoever sends me a message, I can see it. All right. Where are we going? Ooh, Alacran wants to take a look at QCOM. I forgot to tell you. This is my last night version until Sunday. And Sunday, you're not going to see this setup. Sunday, I'm going to be up in Maine, the cabin. It's not really a cabin. It's a freaking. It's an old farmhouse built back in the. It was built before the Revolutionary War. Old house. A huge barn. It's like three-story barn. You can look up. I got a 40-foot ladder. Anyway, that's where I'll be next week. All right, so let's see what we got now.
QCOM,
here we go. Oh, high, low, where was it? Look at the motion. Up, down, up, down. So big drop here. Now, big drop on QCOM. Well, we know they ain't going anywhere.
Okay, we know
QCOM's not going anywhere, but it's not looking that attractive at this moment in time. Judy, that's like the third question. I mean, the third email in a row you wrote.
So let's look at
the last 30 days.
Look at this big drop.
We had a drop yesterday, and we had a gap down today and a big drop. All right, so we're at 146.
So what does that mean?
So what does that mean?
It doesn't really
mean anything, actually.
Okay, the
market maker dropped it. And it dropped.
Interesting
thing. I always wanted to figure out.
See the blue lines?
That's the volume. Look at how much volume there was today.
The market maker drops the price, and it kept on sinking. Now, are those buyers jumping in to get a better price,
or are those sellers panicking
to get rid of it?
They never tell us if they're buyers or sellers. They just tell us that that's the volume, how many shares were traded.
I got a bunch of questions
over here, so let me see what we got over here.
Gates,
AWR, American Waters. Yeah, American Waters is a monthly Gates. I don't do monthlies. But AWR is a good company, though. They are a dividend king.
Yeah, Paul
said it's a monthly. Thank you, Paul.
Oh, thanks.
I did not know it was a monthly.
No problem.
Even if it was a great stock, look at 75 strike is paying. Yes, big fat zero.
Thank you
for that one.
Judy!
Pay no attention to the man behind the curtain.
James,
you're a good man. Thank you there, Miss Judy. A good son buying your mama a house. We need more men like you. Okay, James, you speak German. What's up with that?
Gates,
you would be surprised.
All right,
so anyway, let's keep on progressing forward. Oh, what else do we got? So that's QCOM. Now, don't get me wrong. I like QCOM. It is on my list. Remember I talked about the list? Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. Those five lists right there can give you about 300 quality companies. If it's good enough for Warren Buffett,
good enough
for me.
Okay.
So big drop. What does that mean? That means we are bottom fishing with QCOM. As soon as we find that bottom, she turns around. Let's see what it looks like. So I'm going to write QCOM down for next week. And we'll take a look at it again, because as soon as we find the bottom, because it could go back down tomorrow, it could go down more. When it's done, stocks go up until they're done. And then they go down until they're done.
They will
turn around, go back up. They will turn around, go back down. I've never, ever had a stock come over to my house, wash the dishes, take the dog for a walk, dump the trash, trim the hedges. No, they go up, they go down. That's it. That's all. Number one, never buy something you don't want to hold on to. Number two, never sell at a loss. Make sure it's consistently profitable, weekly options only, and then make sure the numbers work. What are the numbers? The numbers here, 146. We'll be looking at the 147. I got to change that. Hold on a second. That's covered stock. We can't see what we're getting on coverage. It has to be single.
So,
okay.
Big number.
146.76. Closest strike price. 147. 270. Now we all know, hypothetically, you should know, $2.70 is more than 1% of a $147 stock. I just want the insurance payment. The stock can do absolutely nothing. Stay exact. Stocks go three directions: up, down, and nowhere.
Means it
could stay the exact same spot. Very rarely it does, but it could.
So if I jumped in tomorrow morning
at 146.76,
I sell next week's 147. I can pick up 1.5%.
Hear that, Roger?
Hear that, Roger? 1.5% for QCOM for 1 week. If I like QCOM. What's my target? 147. What is it at right now? 146.90.
It's not that far
It's not that far away.
Can it
hit 147 between now and eternity? Yes, it can.
Am I
going to sell it for less than what I pay for it? Hell no. But that's me.
I
have no control over what you guys do. You have to decide what is right for you. Number one, never listen to some idiot on YouTube. That's me. Do your own research. What I ask of you when you leave here, number one, does it make sense?
That's it.
It either makes sense or it doesn't. Do you think you can do it? Are you willing to make the effort?
Come here
every night. I'm going to be here every night, and then at the end of the year, December, we're going to decide what's going to happen there. Because once my company goes public, once I start selling stocks and once I start selling bonds, I can no longer do this. So let's keep on moving forward. Madeline. Okay, Madeline. As Alexa, are you the guy from The Big Short with the fake eye?
No,
I don't have a fake eye. They're both real.
Teach me
how to make money like you. I can't believe that you're not answering me. Nobody's ever ignored you before, Madeline? I don't mean to be insulting or anything like that. D-Mini, hold that thought for a second.
Well,
if he doesn't want to teach anyone how to make money, I should do the same. Not quite, Madeline. Well, if he doesn't want to teach... Okay, you already did that one. It's really a scam. Thank you, Madeline. Someone's ignoring you. I'm not really ignoring you, Madeline. Terribly sorry the world doesn't rotate around you, but there's six other cameras, which means there are six other sets of conversations going on, not including the conversations going down here on the computer. I'm terribly sorry if the sun is not shining on you at the moment. But there are other people here. So I can't just focus everything on you, my dear. Terribly sorry. Roger Moore, if you don't teach the downside, it's not teaching. It's marketing. No, it's only marketing if you're trying to sell something, Roger. Okay? Collecting mails for the company. Okay, even WhatsApp. I don't do WhatsApp, Madeline. I already told you that one. Okay, if I don't teach the downside, it's not teaching, it's marketing. Okay, Roger, you want to know the downside? Here's the downside. Okay, there is a possibility that the Earth could open up and swallow Comcam and it will disappear. That's your risk. There is a risk that if you buy it at 146, it can go to zero. So remember I told you, rule number one, never buy something you don't want to hold on to. If you don't understand what the rules and the risks are, you shouldn't be playing this game. And yes, it is a game. Just like Monopoly. 4 greenhouses, 1 red hotel. Go around the board, you collect rents. Well, here we go week by week and we collect weekly income, weekly premiums. And yeah, to make Roger feel better, there is risk to every thing you do with money. As a matter of fact, Roger, there is a risk for you to do absolutely nothing. You can wake up in the morning and you can stay in bed. And then you run the risk of a plane crashing into your house, a car going off the highway and slamming through your house. Do you remember the movie The World According to Garp? You went to look at a house and a plane crashed right into it. Let's buy it! Because it already had its tragedy. There's a risk everywhere. As soon as you walk out your front door, you're at a risk of a drive-by shooting. You're at a risk of a tree falling down on your head. You're at a risk of every single thing, every moment of the day. You really want to talk about risk, Roger? Or do you really want to talk about stocks and opportunities? But he's right. By not telling you there are risks involved, investing, there are risks. You are going to buy something, and it is going to drop. Whether or not you react to it positively or negatively, that's up to you. Also, on the flip side, you're going to buy something and it's going to shoot up. Also, if you do absolutely nothing, there's a risk in that also. You're risking missing out on opportunities.
Brad,
Don't waste our time on the haters.
Just
educate us. Brad, I like your thinking, I really do. But he does have a point. By telling you that you can buy shit and not lose money. Well, I didn't say that. Okay.
All right.
Okay.
Let's keep on going.
Let's keep on.
Do your Charles Schwab
account allow you to connect your credit card or debit card?
Actually,
Brad,
Charles Schwab
and
Robinhood
Robinhood
both
give me credit cards and debit cards on my trading account.
Madeline, tell me the platform.
This platform here is Think or Swim, and it's offered through Charles Schwab.
Andrew, trading is fluff. Try asking the platform for advice on Trading Thomas.
I have no idea who Trading Thomas is.
Bud, you
talk too much. Thank you, Thomas.
Bear
in there. What the hell does that mean? He takes time to read. Thank you, Andrew.
I don't
teach.
Oh, if you don't teach,
you already did that. We already did those questions. Cut up there.
Brad,
do you recommend? D Mini. Do you recommend buying your options back
if you make
3%
or just
sell it?
Make your original
4.5. Hold that thought for a second.
Where can
I find the platform?
Thinkorswim.com.
Okay,
Brad.
Here's the thing.
Okay,
what Brad is asking, does it make sense to buy back the option? That's a conversation only you can come up with. So here's the thing. As the stock drops, the option values drops also.
As the stock increases,
the value of the option increases. It's always going to come down to a numbers game.
What did
I buy it for? What option did I sell?
What's
it at now?
Okay, so
I buy on a Monday. When I buy a stock on a Monday and I sell the option, because remember, you got to get the terminology correct, because most people don't lose money by hitting the wrong button or saying the wrong thing. Buy the stock, sell the option. When I sell the option on Monday, I have 5 days of time value. Tuesday, I just lost 20%. Wednesday, I just lost 40%. Thursday, I just lost 60% of time value. Now, time value is only one component of the option, and that gets confusing. But here's the thing. I try not to buy them back unless I'm going to roll it forward into another week. Okay, so I can buy back the options on Friday, Wednesday, Thursday, Friday, depending on what the numbers look like. It's always going to be a numbers game. What did I buy it for? What did I sell? What's my rate of return? If I do this, what does that mean? If I do that, what does that mean? If I do nothing, what does that mean? Okay? I'm going to quote great John F. Kennedy. Are you ready?
We
cannot answer the questions of tomorrow with the information we possess today. I have no clue whatsoever what the stock and option price is going to be on anything come Friday afternoon. We have to go through Monday, Tuesday, Wednesday, Thursday, and we have to get to Friday afternoon. And on Friday, we take a look. What did we buy it for? What did we sell? What's it at now? What does that mean? So I have, in my investing, I have two goals. Two, consistency, profitability, and safety of my preservation of my capital. That's my two goals. Consistent profitability, preservation of my capital. I'm 61 years old. I could go back to work if I wanted to, but I don't. I've been working since 1973. First job, Old Man Simmons Farm. Okay? I've been working a very long time. I could go back to work, but I don't have to, so I don't want to. Okay? Now, let's get some more of these questions.
Brad,
so teach me OB1. Keep showing up, Brad. You're new here. First time I saw you.
Don't waste your time on the haters.
Is the 4% of your cash account for everyone, or did you negotiate it? Now, I'm assuming the cash account, that's 4% for the year. Okay, so money just sitting around, I'll get 4% return on it, but I very rarely leave money laying around. What is the correct that your option could be exercised before Friday? Oh yeah. Okay, so what he's saying now, what he's asking now is American style options. whoever buys the option can at their leisure exercise it anytime they want. So if I buy this tomorrow, I sell somebody the rights to buy it from me tomorrow. Now it's going to expire next Friday. They can exercise it anytime they want. Monday, Tuesday, Wednesday, Thursday, or Friday. They don't have to if they don't want to. That's the beauty of a call option. You have the right, but not the obligation to buy any time at a predetermined price. That's the strike price at a predetermined date. That is the expiration date. Okay, 1 August is tomorrow, 8 August is next Friday, 15 August 2 Fridays, 22 3 Fridays, 4 Fridays, 5 Fridays, 6 Fridays, so on and so forth. Every single Friday. Just think of it as a soda machine or a vending machine. You buy a vending machine, you put it at the corner. You go every week, you fill it up, you get your cash. Same thing. Okay, I take a look first thing in the morning. What did it do yesterday? What does it look like it's going to do today? What is my risk? What is my reward? It's all a numbers game. We're all adults. We know how it works. You all know. If I put in 40 hours this week, I'm going to get $1,200. Well, if I put 40 hours in and a couple of hours extra in overtime, I can get $1,600. We all know how it works. This is just a little bit different. Same numbers, same concept. I'm investing X amount of dollars. I'm getting this kind of return on a weekly basis. Am I going to get that every single week? No, the number's going to change every week. So this week, the one we looked at earlier was like 4%. Well, next week it might be 2. Next week it might be a 0.5%. But listen, a 0.5% every single week is 26% per year. I don't know when the last time you got 26% every year. I think that's pretty damn good. Brad, what's the benefit selling on a Monday instead of later in the week? Okay, Brad, you ready? See if you can count this with me. 1, 2, 3, 4, 5. Monday, Tuesday, Wednesday, Thursday, Friday. 100% of time value for Monday through Friday. Monday's gone. You now have 80% of time value. You just lost 20%. Tuesday, you just lost 40%. You got 60% less. So let me ask you this question: would you prefer 100% or would you prefer 60%? Okay. Now, granted, I simplified it because there's a lot of information that goes into the pricing of a stock option. It's called the Black-Scholes pricing methodology of standardized options. It's a huge calculation to try to figure out how do you value an option. Well, that's how you do it. That's how you Brad. That means. Andrew! Support will help you on the platform, but it's like asking a politician yes or no. Thomas is in chat, James. All right, Jay Moore. We already looked at ULTY. The company's not even 2 years old yet. Okay. For me, it's a no. I don't do companies less than 20 years. I'm terribly sorry. It's great potential for those of you that are looking for great potential. What I'm looking for, consistency, predictability, profitability. I'm not looking to hit a home run. I don't know if any of you have seen the movie Moneyball with Brad Pitt. What's the other guy? I forget his name. Okay. What about Humana? I have some Humana. I don't have ULTY, but I have Humana. Let's take a look. HUM. HUM. Humana. Okay. Ooh, check that out. High, low. Where was it? Look at the motion. Down, up, sideways, down, up. Okay. So that's what it looks like. That's the overall view. 3 to 4 seconds. That's all I need to see at this moment in time. All right. Step 2. Number. The biggest number on the board. 249.87. The closest strike price to 249.87. 250. $5.50 now, right at the top of your head. $5.50 on a $250 stock. That's 2%. How do you figure that out? Check it out. $2.49. What is 1% of 249? 249. Isn't that weird? 249. 1% is 49. You move the decimal point over spaces. 250. What's 1% of 250? 250. What is it? What are they offering? At the moment, they're offering 550. Well, if 250 is 1%, 250 times 2 is 5. That's 2%. But this is 550. That's more than 2%. Okay, so numbers work.
initial look at the chart fine. Now we go into a deeper dive into the chart. This is where I want to look at the 1 year, the 90-day, and the 30-day. And if everything looks out good, we'll look at the seasonality chart just to make sure it's the right time to buy. Now, just because this is good, just because this is good, great. But is it the right time to buy?
Roger Moore, ULTY, great dividends, but you have to weigh in on the loss of capital.
I'm well aware
of that, Roger. I'm also well aware that ULTY is less than 2 years old. Hell no for me.
All right. So anyway, let's take a deeper look at this one.
Let's move this out of the way.
So we get a better view.
A year ago, last of this one.
A year ago, we're right about
365.14.
The high of
the high year was 383, and that was the beginning of September.
Way over here. Okay, the
bottom of the
year was way down over here.
Is my last 90 days. 90 days. Same thing.
High, low.
Where was it? Where is it? Look at this.
Down, up.
Simplify. Don't make it complicated. It doesn't need to be. Adults have a tendency to make this more complicated than it needs to be.
So let's last 90 days.
Definitely in an upward trend.
Let's zoom in
a little bit closer.
Look at the last 30 days.
Now, the reason why I want to look at the last 30 days, because the last 30 days gives me a great idea of where do I think it's going to be in 5 days.
One of the reasons why I don't do monthlies,
this is a month right here. That's 30 days.
Down, up. Great. Tell me what's going to be in 30 days. Yeah, that's one reason.
That's the reason I don't do monthlies.
Trying to figure out
what's going to be in 30 days is not that easy.
But here, the way it looks like it's going to come down. Looks that.
Doesn't mean it's going to.
Let's check out the
seasonality. Now, for you who don't know what seasonality is, well, you know what it is, but
equate
it to what we're looking at.
Now, we all know
seasonality, winter, spring, summer, fall.
We
all know that.
Well, all the way to the left
is January 1st. All the way to the right, December 31st. The blue line is the movement this year. Blue dot right there,
that's
today.
This
red line here,
I have
mine set at 10 years. So that's 10 years of data. 2015, 16, 17, 18, 19, 20, 21, blah, 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 blah.
But
this is the average movement for Humana year after year after year. So right there, an upward trend right here. So let's zoom in a little bit closer.
Right under the blue dot,
left click, drag, right, go. So 731.
Okay,
there's 1 week. There's 2 weeks. There's 3 weeks. So for the next 3 weeks, it's a nice slow uptrend.
Very
slow uptrend.
Right
there.
Okay. See the
crosshairs?
A very slow
uptrend
for
the next 3 weeks.
So
here's the thing.
Okay,
it's on my list, which means it's a company that is consistently profitable.
It
is
at the
beginning of an upward trend
based
on historical performance. Does that guarantee that's what it's going to do? Not at all.
Think of it this way.
Think of this as the rear view mirror. Now, what good is a rear view mirror?
As you're
driving down the road, well, you know what's in front of you.
This
only gives you an idea of what's behind you. What has it done over the last 10 years? Now, does humanity do anything new and interesting? No. They do the exact same thing that they've been doing for the last 5, 10, 15, 20, 30 years. Same thing. Nothing new. So is it safe to say that they probably will trend up like they did last year, the year before, the last 10 years? Probability. Another probability in my favor. I love putting odds and probabilities in my favor. This is just one more.
Disney.
Jay Moore wants to take a look at Disney. Where am I from?
I
predict Humana will hit around 345 in about a month.
Okay, Jay
Moore, thank you.
Lorenzo,
how are you today?
Got it.
Hey, sweet Dan, how you doing?
Well,
Both sides water.
Joey,
Thank you. Appreciate it. Nettie, appreciate you. Thank you. Okay, we're way past. We're 11:30. Way past my bedtime. Tamiko bought 200 shares of Chipotle at 51.50. What do you recommend for the stall call strike and expiration date?
Oh, now
See, Tamika.
Honestly,
Let me finish up this one first. Okay, let me finish up this one.
So that's Humana.
That's Humana. So back here. Whoops, too far.
Back to where we were.
There.
Okay,
so if you like Humana, 249.
Okay,
So the 250s, the 250s give you more than 2%. If
you
like Humana.
Now,
I don't tell anyone what to buy.
Okay?
Every once in a while, I say, ooh, I like that. I'm going to buy it. Never.
You look into
Every single one of my videos. Never, ever have I ever told someone to buy anything.
Lorenzo,
nice. You can guess where I'm from. Lorenzo. Nope. Don't even want to guess.
Gotta
go, Bernie.
Have a great night.
All right. I take an insult. Thank you there, Roger.
All right.
So that being said,
next
on the list. What was that? Chipotle?
CME,
is that right? CME.
Yeah.
Nope.
All right, you gotta tell me
what Chipotle is. It's not one that I usually trade.
Do I trade
futures? Years ago, not anymore.
How about
SPACs? Nope. F-cash? Nope.
This
about crypto? Nope.
Lorenzo,
this is about dividend investing for weekly cash flow. Chris. Need to understand. Take your time, Chris. Don't be in a hurry. Brad, do you typically pick strike price that is one step out of the money? No, Brad, it's always going to be a numbers game. What is it at now? What is the safest trade? The safest trade is one strike in the money or at the money.
Do
you sell cash covered puts? Very rarely. So to me, you gotta get yourself a Chipotle. CMG. Okay, CMG. Right.
Well,
again, same thing with I've been saying about the other stocks. Bottom fishing. Looking for the bottom.
If you
like Chipotle, wait it out. As soon as it hits the bottom and turns around. If you like that idea, you've got to figure out when to jump in. My rule for me, 2 days to the upside, on the third day going up, that's where I will jump in. Never have I ever picked the bottom. I'm not looking for the bottom. I'm looking for consistency, predictability, safety, profitability. I like the Lee family. They come and visit all the time. Happily. So let's keep on going. I'm making good every week on ULTY. What are my thoughts? My thoughts are the company's not even 2 years old. What happens when the hype is gone? What are they going to do 3 to 5 years ago? Because most new companies don't make it past 3 to 5 years. 1 in 100 will make it to 10 years. So you're still in that new phase. What happens if it just fizzles out? Because a lot of companies get to 3 to 5 years and then they fizzle out. That's why I don't do companies unless they're 2 decades old. That's 20 years. Brad! Can anybody join your call at 9 a.m.? No. It's a paid for service. Okay, now I promise I'm not going to try to sell anyone anything. Brad, really want to talk about it? DM me with your number and I'll give you a call.
Jay
Moore. Do you use patterns such as... Nope. You want to know what my pattern is?
Watch this.
You're going to love this one.
All right, you ready? All right, Jay Moore, you ready?
Watch this.
A year ago. Up, down, up, down. That's my pattern.
Right there.
Okay.
Let me do it again.
A little slower.
You ready?
A year ago. Up, down, up, down. That's my pattern recognition.
Okay, right now it is at the bottom of the year. Okay, bottom of the year. As soon as it hits the bottom, it will turn around and it will go back up. They all do it. They go up, they go down. They go up. They go down. That's it. That's all. Nice. Just market structure and price action. I suppose you could call it that. I call it common sense. What goes up must come down. That's the best way to be. Simplicity there, brother. Okay, so let's keep it. We got a couple more questions. Ratata. Good evening, and how are you today? If it gets called away from losing position, re-enter. Sometimes. Would I buy UPS if the timing is right? Yes. Robin Hood's for children. Kevo, I think you just heard what I said a little while ago. It's for people who are the one that I'm going to do. It's going to be people just starting out who don't have a lot of money to play with. Okay. Such as my 5-year-old grandson. Bought 200 shares. We looked at that one. I can't tell you what to do, Tamika, but I'll tell you what I would do. At 51.50, I just wait it out. If you have the ability. If you have the ability, wait for it to drop. As soon as it finds the bottom, then think about dollar cost averaging. J. Moore, what about FIG? Never heard of it. Isn't that terrible? FIG. FIG. Why can't I see anything on this? Has no options. No. Sorry, J. Moore. No. Let's keep on going. Please type some of the books you wrote. What's your top 5 stocks to trade? Bought 200 shares where I saw that one. Approximately how many tickers on your continuous watch list that are 20 years and pay dividends? I believe over 200. Tamika only asked the question once. I already answered that one. Am I done? Oops. I'm done. Cool. No more questions. Cool beans. That's it. Every question has been answered. Yay for me. I'm done. I'll see you guys on Sunday. Alrighty. So that being said, you guys have a great night at MDT Medtronics. MDT Medtronics is a good company. MDT. Wait a second. Take a look at this. Okay, here's your bottom. She shoots up. 1, 2, 3, 4. Profit taking has already started. If you like MDT, keep your eye on it. See, she goes up, down. Up, down. Now she's coming back down again. When she finds the bottom, turn around, goes back up. If you like it, if it makes sense, if you want to hold on to it. You're not answering which books you wrote. Mention some names, please. Dividends. Wait. Dividend investing for monthly cash flow. How to make 10 to get 10 to 20 checks per month like clockwork. Dividend capturing. Dividends on steroids. Dividend kings. Dividend aristocrats. You want to hear something funny? Book number 14, Dividend Capturing 2.0. I finished it last February. I still haven't uploaded it yet. I'll get to it eventually. All right. Nice insight. Okay, thank you, J. Moore. That's a lot of opportunities. Not necessarily. Okay, Papa. Okay, 300 companies over the whole year. Now each quarter has 90 days, 66 trading days. So that means it's 13 weeks per quarter. Okay, 13 weeks per quarter. First quarter, 1 to 13. Second quarter, 1 to 13. Third quarter, 1 to 13. Same thing. Okay, the funny thing is, week 1 of first quarter looks the exact same as week 1 of the third quarter. Jeff. What's your daily process as far as morning routine, pre-market and time allocation per day? Time. Here you go. You ready? Ready, Jeff? Here you go. I wake up when I'm done. That's usually when the sun gets up. If the sun gets up at 5 a.m., I get up at 5 a.m. If it's a cloudy day, I sleep later. I get up. I turn my computer on. About 8 o'clock, I send a link to all my live traders. Okay, then at 9 a.m., I do not turn my computer on before 9 a.m. I don't.
At 9 a.m. I turn my computer on, and everybody gets to see my computer as I would see it first thing in the morning. I don't sit in front of it trying to find things. No. And then I'll go over account number 1, account number 2, account number 3. Then it's open for questions. And then I will stay on until people are done asking questions. That's my day. Usually by myself, 15 minutes max. But with a couple hundred people watching, it takes a little bit longer because then I have to answer questions. All right, so you guys have a great day. We got some more questions over here. Judy, hi James, appreciate your transparency. I have never met a stockbroker or 401 advisor ever show their trades. Ooh, Schwab looked real to me. Could be, because it was. Love the commentary. All right. I'm loving the takedown of Roger. I'm glad you like that, Mark. Mark, James sidebar is making 1,500 on 51. Definitely gave me hope to leave my job for the year. Oh, cool beans, Judy. I had a Catholic uniform for 10 years. The same red gray jumper. Cool beans. Mark, I hope you can do the Patreon after January. I'm pretty sure I'll be able to do Patreon because most of the people, a lot of the people that show up every single day have expressed a desire to be board members. And that's a whole different conversation. So I'm not 100% sure how we're going to do that because I can't do publicly, but I can do privately. And if it's a private membership, it does not affect the FINRA rules. So yeah, we'll still be doing the Patreon, which is the live trading group after the year. But I won't be able to do the night shows. Okay, Mark. Right. You guys have a great night, and we'll see you again tomorrow. Remember, tomorrow, 2:30. So look in your computer or your email right around 1 for your links. All right, have a great night, everyone. You guys over here, have a great night over here. Oh, end the meeting. There we go. End the meeting there, and over here, and there, and over here. You guys have love the channel. Thanks, Gene. Have a safe trip to Maine. Oh, can't wait. You don't hear a funny story? Florida hockey dude. Okay. I flew up a couple of weeks ago to meet up with my buddies from high school, and I wanted to rent a car, and it was going to be because it was 4th of July weekend. It was $800 to rent a car for 5 days. So you know what I said? Hell with that. I went to Facebook Marketplace and I bought a 4-wheel drive pickup truck. So I got a 4-wheel drive pickup truck waiting for me up in Maine. So every time I fly up there, I got a pickup truck. And then the great thing about it, I can turn around and resell the truck for more than I paid for it. So, hell with you guys. Anyway, you guys have a great night, and we'll see you again Sunday. And now, all right. Thanks for the answer. You're welcome, Jeff. Just talking trash. GBT takes your job. I have no idea. Be safe. Thank you for your knowledge. You're welcome. Toe ticker? Hey, I've never met a more... Well, but you're raw then. Done there. And you guys over here got it? All right, have a great night, everyone. Good.